సార్ హలో సార్ అన్మ్యూట్ యువర్ సార్.
చెప్పు వెంకట్.
అటుని యూట్యూబ్ చెక్ చేయమని చెప్పండి సార్. స్టార్ట్
వస్తలేదట వెంకట్.
సార్ స్టార్ట్ అయింది.
వచ్చిందట.
ఓకే సార్.
మాట్లాడుతుందా? నేను మాట్లాడు. వెంకట్ మాట్లాడు.
సార్ ఒకసారి చెక్ చేయండి.
బట్ ఓకే వస్తుంది.
సాటిస్ఫైడ్ గా సార్.
ఓకే ఓకే. Sir, good afternoon, sir.
Sir, good afternoon, day. Very good afternoon.
Yeah, welcome to this session, sir.
Yeah.
Sir. Sir,
Sound
sir,
Yes, sir. Resource officer is here, Venkat.
sir.
Sir
సార్కి
already admitted. Sir already admitted.
కోర్స్ ఇచ్చిన సార్ సార్కి
No.
సార్ నో యువర్ కోర్స్ సార్
Okay.
ఎవరు నేనా?
ఎస్ సార్
Sir.
ఓకే. అంటే ఇప్పుడు అడ్మిట్ మీరు చేస్తుంటారు కదా, నేను చేయనక్కర్లే కదా అడ్మిట్.
అక్కర్లేదు సార్, మేమే చేస్తాం.
ఓకే ఓకే ఓకే
వీఆర్ ఆల్రెడీ డూయింగ్ సార్.
ఓకే గుడ్ గుడ్ గుడ్. ఎంతమంది జాయిన్ అవుతున్నారు జనరల్ గా రోజు?
400-500 సార్.
ఆహా.
అది యూట్యూబ్ లోకి వెళ్ళిపోతారు సార్, ఇక్కడ కెపాసిటీ అయిపోగానే.
ఓకే ఓకే ఓకే.
నా వాయిస్ బాగుందండి?
Yes, sir.
సార్ నరేష్ సార్,
యా
సార్ మీ దగ్గర ఫ్యాన్ ఉందా సార్?
అవును.
సౌండ్ కొంచెం
ఆఫ్ చేయమంటావా?
వస్తుంది.
ఓకే ఓకే పర్లేదు. అక్కడ తక్కువ ఒకటి. ఇజ్ ఇట్ ఓకేనా? వెంకట్ ఓకేనా ఇప్పుడు?
కొంచెం ఏదో జింగ్ సౌండ్ వస్తుంది సార్. అదర్వైజ్ ఓకే, అంటే నడుస్తుంది.
నా దగ్గర నుంచి ఏమైనా వస్తుంది
సార్ లేదు సార్, మీది క్లియర్ ఉంది సార్. ఇప్పుడు ఓకే సార్, నరేష్ సార్.
ఓకే
సార్ అడ్మిట్ స్టాప్ చేస్తున్నాం సార్. 52 మెంబర్స్ ఉన్నారు.
చేసేది సార్. సార్ లేదు సార్, ఇగో ఇక్కడ సెషన్ స్టార్ట్ చేస్తున్నాం. రైట్.
నా స్క్రీన్ వచ్చిందండి?
ఎస్ సార్.
సార్ ఓకే సార్.
వచ్చింది సార్.
సార్ సార్ రికార్డింగ్ చెప్పినా మనకి యూట్యూబ్ లో ఉంటుంది సార్. నేను యూట్యూబ్ లో మీకు కాల్స్ కట్ చేసి ఇవ్వమని ఇస్తాను.
ఓకే
ఇబ్బంది ఏం లేదు. స్టార్ట్ చేసింది.
Yeah, good afternoon, all the participants.
Good afternoon, sir.
Good afternoon. Yeah, I welcome.
Good afternoon, sir.
I welcome.
సార్ ఒక సెకండ్ సార్.
Raghu garu. Raghu is an entrepreneurial professional leader with an experience of close to 25 years. His experience and areas of advisory ranges from management consulting, corporate governance advisory, business setup advisory and execution in India and overseas, capital raising, domestic and international listing, turnaround strategy for businesses, joint ventures and foreign collaborations, corporate law advisory, mergers and acquisition, insolvency resolution. Raghu is a co-founder and partner of R&D Associates, a professional services firm engaged in corporate company compliance since 1997. Over the last 2 decades, firm has grown as one of the leading and credible corporate secretarial and legal services firm in India, with branches in Gurgaon, Chennai, Mumbai, and Amaravati. Firm has trained over 200 plus people during this period. Firm has also expanded its practice areas. Raghu has closely seen more than 500 companies in various stages of their life cycle and worked with a number of promoters, entrepreneurs, professional managers. Firm currently has over 300 plus active relationships and a team of 40 plus people. Raghu is a mentor and a strategic advisor to Samistri Legal LLP, a boutique corporate legal and transaction advisory services firm since 2014. He is co-founder and managing partner of Edge Resolve LLP, insolvency professional entity engaged in insolvency and liquidation services since 2017. So sorry, having a vast experience and knowledge in this area. So one important point I want to share with you. Sorry is our alumni and he has completed his MCOM in 1995 from PG College, Secunderabad, Osmania University. I am very much thankful to you, sir, for the part of this university. Not only that, sir has organized so many number of programs like 3 days to 7 days. Now, many programs are attended and conducted. Now, sir, excuse me, I want to cut down on the certain things because of the paucity of the time. We want to extract more from you, sir.
Sure.
And honorary positions that I is holding now: member of corporate law committee of Federation of Telangana Chamber of Commerce and Industry, trustee of Abhaya Foundation, not for profit working for the betterment of the society, member of Secretarial Standards Board of Institute of Company Secretaries of India, ICSI for 2009, expert advisory board of ICSI, vice chairman, Hyderabad chapter ICSI, charter member of TAI since 2013. TAI is a global NGO working on entrepreneurship development. Raghu was the founder secretary of Rotary E-Club of District 3150 in 2011, the first Rotary club in India. Sir, we are very happy with your presence here, and our participants will benefit a lot from your experience and the vast knowledge on the subject. So I welcome you, sir, for this 7-day workshop on the financial literacy. This is a congregation of commerce students, art students, management students, science students, sir. All are postgraduate students. So I welcome you, sir, once again. I thank you, sir, personally and on behalf of the even department for accepting our invitation and acting as a resource person for this first technical session of the day 2. Thank you, sir.
Thank you so much. Yeah. Sir, my screen is visible.
Yes, sir.
Yes, sir.
Yeah, very good afternoon, friends. I want to thank Dr. Naresh Reddy Garu for inviting me to this workshop. I also want to congratulate, sir and the Usmania University for conducting this. I mean, happy to see we are doing this workshop and, across India, a lot of students are benefiting out of this. And as sir said, I'm the student of the Usmania University between 93 and 95. I did my MCOM from PG College, Secunderabad. It's always a pleasure and, I'm extremely happy to come back to the school and, share my knowledge. So I keep doing this very regularly. Every year, once or twice, I'm in university calls and I keep coming and, doing this seminar or a workshop. I mean, the topic, we are talking today is the capital markets. I mean, it's a very vast subject, but it's very important to any country. Capital market is, integral to the economy. Without capital markets, I mean, how do we serve, how do we serve, how do we grow, how do we, raise money and, put this money into productive assets, all those are very important. We will get into a little more details. I mean, I was also seeing, very diverse topics, Sarah's, bundled over the 7 days. And I also see a lot of faculty whom I am aware. I think PR Ramesh Garu, I think he has inaugurated this session. He's a veteran and, we have a lot of regards to him. After me, I think Mr. Sekizar is coming again. He's a good friend of mine, I think, on the money markets. So without wasting much time, let me get into the topic. As I said, the topic is very vast, but I wanted to spend, maybe 5-10 minutes on the little bit on the context, today's context where we are as a globe and as a country, and in particular to the capital markets. And then we'll go more deep into the subject. Friends, I mean, whoever is listening, please raise your questions. And, as I keep getting questions, maybe I can take a pause after 30 minutes, 45 minutes. I will answer your questions. And then, we'll go back to the session, the presentation. If you can raise more and more questions, if I'm able to clarify, if that is helpful to you, I think, that goes a long way in terms of justification for this session. So much of effort has gone in arranging this. I mean, friends, I mean, this COVID pandemic, I mean, maybe last 100 years we never experienced and we are experiencing. I mean, this has given a big shock to the entire world, though we've been saying we have advanced from science and technology, so many inventions have happened. The life expectancy of the human being has grown many-fold over the years because of the development in the medicine field and science and technology. But despite that, this virus has challenged the entire human race. I mean, I think a lot of work is happening, but I mean, there are a lot of, concerns and, which is shaking the economies, the livelihoods. I mean, so many things, 6 months back, we never thought, we will experience something like this, that, we have to stay back home and, we can't work, entire country would be shut down. I mean, so all that has happened. Today it is a reality. Still we are yet to, come out of this pandemic. I think in terms of vaccination, I think a lot of companies are working, but maybe by the time we get the vaccination and every human being is given that vaccination, I think it's a far from now. Maybe it could take 6 months to 1 year. While that's a big challenge, it is thrown to the human race, but definitely there are some good outcomes, which the COVID has taught us. I mean, to be grounded and to focus on our health. How do we use the technology more effectively, efficiently? This has also helped in terms of automation, digitization, automation in a big time. Normally, adoption of technology by non-technology businesses or governments or the judiciary, academia, all of them, generally, they would take more time to adapt to the technology, having got used to the non-technology world. But now, the pandemic is making all of us to learn, and what we thought it would take maybe a couple of years, maybe we are able to learn all of that in couple of months and couple of weeks. We are getting, used to it and taking benefit of that. That's a one fantastic, good thing which has happened after the, the advent of, the internet, and the internet has leveled the entire world as a, as a single universe, and there are no barriers. If you have internet connection, you are part of the global world. I mean, the opportunities are equal for anybody, either somebody in Hyderabad, somebody is in the remote village, as long as he has an internet and is able to access to the, the world, on the internet is concerned. So that's one revolution which has happened, and the pandemic also has some good outcomes, I think, which are helping countries like India a lot more than the developed countries. Given we are huge population, and in terms of healthcare, education, we don't have enough infrastructure, either teachers or the physical infrastructure. Using this technology, I think we can fast pace. So, best school, what we are doing today, Usmania University is organizing this, maybe across India, so many people are able to attend this. Maybe somebody is in the village or maybe mandal or a district, but they are able to get best access to the resources. That's the one good thing about the COVID which has thrown. I mean, the another very, very important development today is last few years we have been saying we are in the fourth industrial revolution. I mean, we have passed through, three industrial revolutions. We are the fourth industrial revolution. I mean, where the physical world and virtual world are getting merged. Either you take machine learning, artificial intelligence, cloud computing, blockchain, all of these technologies are, coming in big way, which are getting penetrated. So I'm just to give, one line, talk about the artificial intelligence. We know the impact of electricity, what has done to the world. I mean, without electricity, we cannot imagine today, how can we live? But, similar way, the artificial intelligence, mimicking the human mind, the computer mimicking the human mind is called artificial intelligence. So the artificial intelligence is going to change the world much, much bigger way. If the electricity had an impact of 100, so the artificial intelligence impact could be 10x of that. I mean, that is the power of artificial intelligence. I mean, that is getting penetrated in multiple ways, and it's a good sign. I mean, all these technologies, as long as we use for good things, it is very, very useful. But if we start using for you misusing some of those, and those side effects are very, very devastating, and again we could get into a larger problem. And then, I mean, some of you may be aware, these FAANG companies, are the participants able to raise questions and all? Friends, again, because of the internet and the, technologies like, the artificial intelligence, we have these huge, giants now in the world. They are called as FAANG companies. It's acronym for Facebook, Amazon, Apple, Netflix, Google, Microsoft, all those fall in, that kind of a category. I mean, what are we talking? The one distinction between the earlier, industrial revolution, wealth creation, how wealth was defined, and in the current generation, wealth is defined completely in a different way. What is wealth for Facebook? It is number of users on its platform. The more users, more advertisement, more money, more wealth. It's not, having land, having gold, having, vehicle or a jewelry. All those have gone. Now the FAANG companies have redefined. Data is new oil. If I have a data of, say, 1.3 billion population, I mean, that's a very useful information. That's what we find in equivalent in India. We have Jio. I mean, who is kind of, following the footsteps of FAANG companies, and they are trying to create a platform. These companies are called platform companies. Now the amount of size they have garnered, I mean, this is one worry for the world today. The influence the FAANG companies have on the individuals, on the politics, on the governments, on the businesses, on the small and medium businesses, on the employment, huge. Every area they have an influence. I mean, just to give a little bit more. Today, I mean, world population is, I think, 5 to 6 billion people. But today, 2 billion people are on the Facebook platform. You see, I mean, every 1 out of 3 people on the universe are connected through Facebook. I mean, that's the power, so 1/3 of people are connected. In that, there's no other channel, which is as big as Facebook. Now you see the market value of these companies. The market value of these companies we're talking about $2 trillion. Recently, Amazon has been valued at $2 trillion. Humongous. I mean, it's huge. Our Indian economy is today is around 2.2 trillion. We were 2.8 trillion last year, but today, because of the the economic slowdown and post the COVID, we are at 2.2 trillion. So we are talking alone, Amazon alone, equivalent to $2 trillion. I mean, we are talking about 1 billion is 7,500 crores. I mean, we are talking about 2,000 billion dollars. I mean, that is the size. All of these companies are such scale. While they have done something very good from a technology is concerned, but given their size and their influence levels, they track behavior, they track your consumption, where you are going, what you are doing. So, I mean, we all know, right? I mean, the last US elections, there were rumors that Facebook has influenced one particular party. Even in India, we have that kind of a thing. Even today, I mean, there are rumors, it must be also true some extent, that these companies are influencing or have bias towards particular political leader or political party, and they are able to put that in the minds of their users, giving a particular impression. That's a big concern. But these are the big FAANG companies today, ruling the world. I mean, there are, these companies have built based on the subscribers and users and technology without having any hard assets. There are a lot of other companies like Airbnb. I mean, they don't own any hotel, but I mean, they are only aggregator or a marketplace. They are able to influence the entire hotels. In the automobile, same thing, like Uber and Ola, who are influencing the manufacturers, customers, so many people, but they have not put any car manufacturing facility there. They have not spent time few decades like other automobile companies. These are some of the dichotomies and the confusions we are in. So they like a print and electronic media, the newspapers, news channels, they invest a lot of money and time getting the news from the grassroots level. They have the agents who who capture the news items and publish. But people like Google, they have just built a technology. They can go to any print channel online, gather the information, publish the news without incurring any cost. Today there is a question mark between the I mean, the real content players who are incurring costs, but they are not making money. But these, Google like of guys who are using that content, but they are not incurring that cost. Australia started, Australia started saying the Google should pay some amount to these, media channels, print and electronic channels who are creating the original content. I mean, where competition is coming, is it good? What is happening on the, anti-competitive practices? When these companies become very big. I mean, these are the real big questions which are before various governments are concerned, FAANG companies are concerned. Now, other trend, if you look at, there's a concept called Robin Hood investing and Zerodha kind of a concept. I mean, how much some of you are following the global markets and Indian markets post lockdown. Either in the US or India, people are working from home. They have more time. Now the broadband is available. Smartphones are available. You started investing in the capital markets. One way it is good sign. I mean, the more people invest, more money come into the markets, and that money goes for the lot of productive assets. What Robinhood investing has done in the US, same thing. With the dematerialization, an investor can buy one share. I can buy one share of Infosys, one share of TCS, one share of, maybe, Tata Chemicals, all of that. But in the US, they have went a forward, and the Robinhood investing said, you can also buy 1/10 of a share. They have used the technology. Facebook is costing, say, $100, $200, $300. But, I don't have so much of money. But I am able to buy 1/100th of the Facebook share. Thereby, I am becoming, shareholder. And, the appreciation, I can also get it. The appreciation, obviously, if the market falls, you will also lose money. But some of these, trends which are related directly to the capital market, the use of technology, so that more people can get into the markets. Again, the financialization is a very, very important trend we are going through in India. We all know. Till recently, before JAM, before JAM came in, JAM, in the words of Narendra Modi, is Jan Dhan accounts, Aadhaar and mobile. JAM, right? Pre-JAM era and post-JAM era. Now, what has happened by JAM? JAM is making formalization. Somebody, a pensioner, a daily worker, or a NREGA worker who is not part of the financial system, they have come into the financial system. Everybody was given in a bank account. So all benefits have to go through the bank account, so that money is in the system instead of putting in the cash or a real estate or a gold. So that is one example of financialization. For any country, it's a more financialization, more savings, more money into the system, so that money can be deployed for the productive assets. That's called financialization. There are 3-4 things which have happened last, maybe last 1 decade or so. As I said, JAM, then you have a demonetization, then we have the GST, goods and services tax, PAN number, GST. What is happening now? Every business owner needs to be part of the goods and services tax regime. Then all payments needs to go through the Aadhaar. More than 20,000, more than 50,000. There are various thresholds. Somebody is buying a car, somebody is buying a jewelry, somebody is going for a foreign trip, or you are buying the property. So there are certain parameters by which all transactions are tracked, and you need to file the income tax return. Once you file the income tax return, you have the PAN number, then you are in the system. All transactions you do goes through a formal economy. This is very good. We are a long way to go where we are today from a financialization is concerned. Just to take the example, if you see, in India, saving rate is 30%, China 46%. Yeah. So, so the financialization and saving right also has a direct relation to the investment into various asset classes. We will see what are those asset classes, how are we doing. And just one example here, mutual fund penetration is 11%. Overall it is 62%, but here it's only 11%. So the market can grow many folds. That is the opportunity. Then you see the total market capitalization of the capital market in India versus US. In India, we are at $2.2 trillion. This is what is market capitalization of a stock exchange, listed stocks. This is, you have number of stocks listed on the stock exchange and each company market capitalization. Take an example, Infosys, maybe it's valued today, $10 billion. Reliance today, it is valued, say, $65 billion, like that. So the market cap of all the companies listed is considered as the total market capitalization. I've taken NSE market cap, which is 2.2 trillion, and US market capitalization is 35 trillion. It also depends upon your GDP, your economic growth. Countries like US and all of them have grown, and they are at a different pedestal in terms of their size of economy and the GDP is concerned. We are aiming to become developed economy, and that's where Modi has said next by 2025 we should become 5 trillion economy in 4 or 5 years. Maybe with the COVID situation, I'm not sure how far we can achieve that. But otherwise, there's a long way to go. This is the context we are in, and India is concerned, and the economy is concerned, and particularly, global versus India, where we stand from a capital market perspective. So we will get into a little more detail what it constitutes the capital market, who are the players. It's a very vast subject, but idea is to give you a flavor of what is happening, who are the players, what are the instruments available. That's the idea of this session. Sir, it's going fine. Everything is fine. Audible, clear. Any suggestions? So participants are able to see my screen, right?
Yes, sir.
Yes, sir.
Is visible, sir.
Sir, it's visible, sir.
Yeah, I mean, see these two lines, kind of articulates what the capital markets is. Capital markets refers to the places where savings and investments are moved between suppliers of capital and those who are in need of capital, right? I mean, for anything you need a capital. For doing anything, either at house or the government or a business, any organization, either as an individual or institution, you need a capital. You want to build a school, build a university, build a road, build a manufacturing facility, build your house, build an automobile manufacturing facility, anything, either as an individual or an institution, you require a capital to do anything, right? I mean, capital has two components. We all know capital has two components, debt and equity. At a very, very simplistic level, debt and equity. That's what is capital mean. Now look at, suppliers of capital and need of capital. I mean, the bridge between, suppliers of capital and the people who need the capital is all called as capital market. Who provide capital and who need capital. Everything to do with this all is called as the capital market. Now, taking an example, when I receive my salary, I'll put it in the bank. I will put it, maybe fixed deposit. I will invest in the stock market. I will invest in the mutual fund. Right? You have PF, you have ESI, right? All of these are suppliers of capital. A PPF, saving bank account, stock market, mutual fund, all of this, are insurance, all of this, we are all putting capital into various, these instruments, all these are called suppliers of capital. They're all called suppliers of capital who are putting their capital to work for a return. I'm not putting into, a bank deposit just for like that, right? I need returns. Therefore, I'm putting money into fixed deposit. How does bank generate return? It won't generate return just like that if it keeps money with it. So your fixed deposit is taken and given it to a borrower for buying a house, right? So that's where, whoever takes that housing loan, he will, pay in interest. We get interest on our deposit and the borrower pays interest to the bank. That becomes a cost to the borrower, and that becomes an income to the bank as well as to us. So the mediator here, in particularly this, where fixed deposit is becoming as a housing loan, and the bank is an intermediary. Bank is a channel, facilitating this transaction. Now, bank keeps its own, margin, because bank is managing this. They have to have their own capital and their own people, technology. So there is a cost to it. So they take it from us at 6%, they give it at 8%, and 2% is the margin. Maybe their cost could be 0.5%, 1%, and that's how the whole system works. Primarily, the whole thing is suppliers of capital and people, users of capital or who have need of capital. This is all all called as the capital market. I mean, it's very vast. We'll get into little more details. I mean, the next concept is capital market has two broad components: primary market and the secondary market. Again, just to give a very small example here, primary market is where whoever needs a capital, he is directly raising money. If, example, a startup wanted to get listed on the Bombay Stock Exchange, so they go for an IPO. There is a company called Happy Minds. IPO is going on now. Happy Minds Technologies is a technology company, IPO going on now. So they are saying they are going to the market and say we are giving X number of shares at a price. And as a individual, you and me, I can go and subscribe for those shares. If I subscribe, they're assuming they are raising 100 crores, people who have subscribed, all that money from these, investors, that 100 crores goes to this company and they give us shares and we can start, this is called primary. Primarily, the suppliers of capital, money goes to the issuer or a user who is raising. That's called a primary. This one example I'm giving from a listing and IPO perspective is concerned. This is true in various other categories also. Now, next stage, now company has issued shares, they have been listed. Now it can be traded. Trading is happening already, right? We see there are almost 9,000 to 10,000 companies are listed in Indian Stock Exchange. Today, I can buy, as I said example, I can buy Infosys. Infosys share maybe, I don't know currently today. Maybe I think, let's take an example, say 500 rupees. When I buy today, who's selling? Company is not selling. The existing shareholder is selling. You may be holding shares. You are selling it because you are purchased in the IPO or subsequently in the market. When the secondary transaction happens, so the money does not go to the issuer. Issuer job is over when the primary issue happens. He does, primary issue, he collects the money, he gives the instrument. Those instruments are traded at the subsequent stage in the stock market or other markets. That is for creating the market between the buyers and sellers so that there is a liquidity, so that people are attracted. And if there is an appreciation, the company is doing well, and there is an appreciation, people can make more money. So that's called secondary market. In the secondary market, issuer has no role. But in the primary market, issuer has a role and the money raised goes to the issuer directly. This is broadly, a difference between the primary market and the secondary market. As I said, the capital has two components, equity and the debt. Now, equity related market is called stock market. Stock also means share. Stock also means share, and then bond market. Bond means, all debt instruments broadly comes under the bond market. So that's how the stock market and the bond market. Yeah, so here, there are more categories of suppliers of funds. As I was telling, I gave an example as an individual, but if you look at a very, very large scale, who are the suppliers of funds? Pension funds. Today, either you take PPF or EPF, Employee Provident Fund, Public Provident Fund, Contributory Provident Fund, entire, government servants as well as the private sector, huge amount of money is contributed every month to the Provident Fund. And when they retire or in between they want to take money, so they have given back the money. Earlier, only government was managing pension funds, but today, now it is kind of a little bit privatized. The private fund managers also are managing the pension funds. Huge amount of money. Pension funds is used for any economy, government. The pension funds are huge. For a social security purpose, the pension fund is made applicable to everybody who is working. When you retire, after your working life, you need a support. How do you get it? So you need to have a pension fund. So somebody has to manage these funds, earn returns, generate returns, so that you can give those returns to your contributories, people who are contributing to the pension funds. They are not just keeping idle there. It doesn't make sense, right? So returns have to be generated. So those are called pension funds. Now, if you are watching newspaper and all that, last couple of years, lot of pension funds world over, either US, Canada, Japan, these Arab countries, they are sitting on a lot of pension funds, and they are coming and investing in Indian market. So in India, from another couple of perspectives, if you see, we were growing 8% earlier, and we were growing at 6% last 1 to 2 years. maybe this year we may degrow. I mean, that's what people say. We may degrow, means our GDP may grow negative, means FY20 versus FY21, our GDP could go down, I mean, significantly. Maybe year, from next year onwards, definitely that will start picking up. So there are very, very few economies in the world growing at 6 to 8% on year. If my GDP was here last year 100, this year I'm becoming 106, next year I'm becoming 112, like that. Markets like China and India, they are growing at a much higher growth rate versus the developed economy. Japanese economy, it's degrowing, and growth is negative, growth is 1%, 0.5%, US, all of them. Therefore, though investors there, the money is there, money is from these developed economies coming to India because we are growing more. Therefore, they can get a better returns. So next few years, next 10, 20, 30 years, we are likely to attract huge global funds for our investment. If you see any huge developmental projects government is starting, we are going and talking to the sovereign funds or the pension funds, because they have that kind of a capital and that kind of a time horizon. Some projects may require 20 years, 30 years, so you need capital which stays for 20, 30 years and who can take returns of 1%, 2%. The bullet train project from Bombay to Ahmedabad, it is financed by Japanese government. I mean, they are talking about 1% interest, 1%, 1.5% interest. That is pension funds. Then you have life insurance. I mean, again, we all of us keep paying insurance premiums. Idea is to to take care of your risk, life risk. There's something happens, so families at I mean, obviously, family needs a financial support. That's where this insurance comes. So much of money we are collecting, insurance companies are collecting. So where that money is going? So this money has to be put into use. In any channel you collect the money has to definitely put into use. Only then the returns can be generated. And those investors, whatever you call it, insurance policy holder or a pensioner or a mutual fund guy, deposit guy, they need to get the returns. So any fund houses, they need to generate a return. So life insurance is the other big chunk of funds which are put into productive use. Then the charitable foundations, some of the large charitable foundations, who have thousands of crores, those guys, maybe companies like Tata Sons, entire income, substantial portion is spent on the charitable purposes. Non-financial companies, financial companies is NBFCs, RBI controlled NBFCs. Non-financial, everybody else is a non-financial company. There's a technology company, manufacturing company, automobile company. All of them, they generate year on year additional funds. What do? Either they have to redeploy and see that they grow their business, or they give it back to the shareholders, or they invest. There are the 3-4 ways they need to put into use their money. If you have money, you are not deploying properly, you are not making enough returns, your shareholders are going to shout at you. Why are you sitting on that and you are not generating enough returns? Why don't you return it to the shareholders? Why don't you put up an additional plan? I mean, these are the questions which are going to come. Now, who are the users of funds? I mean, each of us, in some context, we could be suppliers of funds. In other context, we could be users of funds. If you take individual, you have housing loan, personal loan, vehicle loan, right? I mean, all of that. This is one educational loan, marriage loan. I mean, these are the purposes where you need capital. As an individual, as a business, any business, we know, right? I mean, you need a long-term capital and short-term capital. Long-term capital is meant for to create a long-term assets. Short-term capital is meant for a working capital assets. So every business needs long-term capital and short-term capital. Every individual has a loan requirement. Governments, state and central governments, local bodies, everybody is user of funds. The municipalities are raising money. Independent authorities are raising money. HMDA, GHMC, Delhi Metro, Hyderabad Metro, everybody. So capital is required for everyone. Where does capital come from? It comes from our savings, various sources which we have spoken about it. So this circle has to work it. Sometimes the last couple of years we are finding capital formation is very poor in India last couple of years, because even before COVID, last couple of years, our growth started tapering. The demand was not growing, and only businesses expand, put more capital assets, more capacity they create, more employment, more consumption, more demand, all that, that's a cycle, it works. But last 2 years, the capital formation means additional capital getting into businesses for creating new businesses or the expanding the existing capacities is at, stagnated. Their capacity is 100, but they are using at 60, 70. Only if they are using at 100, 110%, then they will start thinking about the creating the additional manufacturing facility that requires additional capital. Today, if you also see either in the US or India, there is a high amount of liquidity. A lot of money is coming into the market, but the absorption capacity is very low. With the rising income levels and less and less opportunities, and the lot of asset classes. Earlier, people used to put it in fixed deposit. Maybe at least it was giving 10, 11, 12%, 15%. Today, I think it won't give more than 4, 5%. And mutual funds, again, may not give more than 8 to 10%. Where do you put money? That is where a lot of people are coming into the capital market, directly or indirectly. Somebody is coming through mutual funds, somebody is coming directly. So you have few select good companies in the market, and a lot of people are chasing those companies. In unlisted companies, you cannot go and invest. There are a lot of risk, corporate governance and the transparency, so many issues, buying and selling, how easy to buy and sell. Buying and selling is very easy in the stock market. But thing is, small, few good companies are, chased by a lot of money. Therefore, some of those stocks are skyrocketing. That's how the market is growing, like crazy. US market, Indian market has grown last 6 months. In the March, when this COVID lockdown started, it crashed big time, but all that got recovered. So because, the money, enough demand is not there for money, it is going and chasing the stocks in the stock market. So the indices is going up, which is not good sign. Yeah, so this is what I was, kind of mentioning. The financial markets broadly two components: primary market and secondary market. Primary market is where issuer is giving that instrument to the investor directly. That is the first time that instrument is getting created and subscribed. That's a primary market. Secondary market is instrument is already created, that security is already created. So the primary issuer is selling in the market. So that's why it's called secondary market. So whether the price goes up, goes down, less, more, no money goes to the primary issuer. If I'm buying today Infosys share, money doesn't go to the Infosys. It goes to the seller. It's a transaction between the buyer and seller. That's how broadly primary and secondary market is defined. I mean, see, the couple of components from the capital markets perspective. One is a corporate finance. I mean, any capital or finance requirement for corporate is called corporate finance. I mean, that all, broadly falls under the capital markets, your common stock, preferred stock, your bonds, debentures, all this is called as corporate finance. The capital market where investable capital for non-financial companies is raised is called corporate finance. And the financial services. Now, in the market, you require a lot of financial intermediaries and financial services who facilitate the capital market transactions. You call it as NBFCs, you call it as the stockbrokers, you call it as a private equity, venture capital, all of, stock exchanges, all these, fall under the financial services domain. Then you have a public markets. Public markets primarily is operated by the stock exchanges for the equity, debt, and various other instruments. We will see some of those things, in the later slides. I mean, this is one data point. What is the percentage of total market cap in relation to the GDP? Well, just to explain, I mean, market cap is only for the listed stocks. So in India, maybe, I don't know, maybe 5-10% of the businesses are listed. 90% is not listed. They wanted to be unlisted. They are small and medium and self-employed, micro enterprises and all that. So your market cap represents only some portion of your business activity, your economy. But still there is a relationship that is established. So your what percentage of GDP is your market cap? If it is if it is less than 50, then you are significantly undervalued. If if it's more than 100, you are highly valued. So means prices are very high. If you see in India, we are at say 63%. US is at 180%. So US market capitalization 180% of their GDP. So that means they are very highly overvalued. Therefore, I mean, the returns may not be very significant because it's already overvalued. The returns may not be that high. That's the concern there. Yeah. Now I'll show you little bit from the RBI data. What this primary market as the secondary market. One table will give us lot more insight into this. Yeah, this is from the RBI site. I mean, this updated, I think last week, August 25th. So capital market and primary and secondary. This is the data of Indian primary and secondary market. If you see the primary market, they have also given number of transactions and the and also value. If you see primary market, we have prospectus and rights issue, right? Again, it's a primary. Either you do a IPO or rights issue, all that falls under the primary issue. Private sector, they have done 154 transactions last year. This year, 1920 is 106 transactions. This is also amount 0.5 lakh crores and 0.8 lakh crores. Though number of issues are less, but we have generated 0.8 lakh crores. Then you have IPOs by the financial entities. Financial entities, could be the banks and non-banking finance companies. Then you have a public sector. In the public sector, you have public sector undertakings, government companies, and banks and financials. Total, there are 158 primary issues, and in 1920 there are 109. So this is based on the who has raised money, which category of institution has raised money. Then you go down based on the instrument. Here we have you see equity and debt. You have equity. 1819, we raised 133 equity issues. 1920 there are only 75 issues. But if you see the amount of money raised is much higher than 1819, almost 4 times. While the number of issues were less, but each issue money raised was more. Debt, there were 25 issues, and here 34 issues. Again, this is classified on issue types. Are the IPOs, are the existing listed companies have raised further money. That's the classification which is given here. Instrument type, issue and issue equity as well as debt. Issue type, IPO and listed. Then the Euro issues. I mean, Euro issues is nothing but Indian companies raising money overseas. Indian companies raising money overseas. That's called Euro issues. These are called ADRs and GDRs, American Depository Receipts and Global Depository Receipts. And companies like Dr. Reddy's, Infosys, Wipro, all of them have their shares listed in the overseas markets. When they are listed there, they're called as GDR or ADR. Then you have a private placement. I mean, which is not an IPO. It is done only for a select category of investors. Again, private placement, you have private sector, how many private placements have done, financial, non-financial, public sector, financial, non-financial. So again, in the private placement, equity how much, debt how much. Then the qualified institutional placement, this is primarily for the listed companies, liquid listed companies. After they are listed, I mean, in their life cycle, they may require monies at a frequent intervals. Instead of doing an IPO, they go and ask, so select institutional investors put money. So that's called, qualified institutional placement. I mean, if you see today's newspaper, Airtel and Voda, they have merged already. Now they have kind of rebranded. They are raising this qualified institutional placement, QIP round. They're talking about 1,500 crores. Then you have a mutual fund mobilization, private sector and second sector. The whole first compartment is primary market. Now, primary market, these are the issuers at high level. These are the instruments they have raised. Now, then look at the secondary market. So secondary market, I mean, here they have taken the BSE and Nifty. This is where I was talking about the market capitalization to GDP ratio. As on March 2019, it was 80%. Now March 2020, it came down to 55. Market, crashed middle of March, end of March, it was very low. So that was the very, very attractive, time to invest in the stock market. So that's the thing. I mean, there's also a derivative segment, all of that we'll spend little time, but this gives you at high level, what are the various agencies who are part of primary and secondary market. Say the participants don't have a facility for audio, right? I mean, it's only they have to raise questions by in the chat box, right?
Yes, sir.
Okay. So do we have any questions? Do we have any questions? I mean, anybody here does invest in stock market, mutual fund? You can,
Yes, sir.
huh?
Dear participants, if you have any questions, please post in chat box.
Okay. So, I mean, as we have seen in the capital markets for a secondary market, we saw primary and secondary market. Secondary market is driven by the stock market operations, right? Now, this is very, very important component. The whole idea is wherever there is an investment made, any of us invest in particular asset, we'll see the asset class and all that little bit. What we want, easy to invest, easy to get back money, easy to liquidate, easy to sell. This is what at ease we want. If it's very difficult, then we may not have a motivation. Like we can compare this with the other asset classes. Buying a plot or a land. How difficult, how easy. It's very difficult, right? You have to do a lot of due diligence, registration, the boundaries, litigation, so many things. But those are the physical assets that very, very challenging. For you to invest, own, protect, all of that. But some of these financial instruments, it should be very easy. Even till few years back, it was not that easy. buying a share was very difficult some time back. If you take maybe 20-25 years back, it was very, very difficult. We did not have so much of technology. Share used to be a physical share certificate. There used to be a lot of forgery, right? Some company was to dispatch it and it has to come to you in the post. Somebody is taking out and misusing it, selling it, fabricating it. As an investor, I wanted to be sure that I can invest quickly, I can exit quickly, I can see what's happening quickly, everything I want on the fingertips. With the aid of technology today, we are able to do that very, very quickly. What happened in few things which have happened in the stock market. One, we have now, which is against, in 1992, we have Securities and Exchange Board of India, which has been set up. Prior to that, it was government who was managing the stock market and, IPOs and all of that. Very, very, bureaucratic approach. And none of us know what is happening, how is the share price is decided, who is getting allotment. There was no transparency. But in 1992, when we have introduced, when we have constituted SEBI Act and SEBI, now SEBI has done, for now, almost 28, 30 years, they have done fantastic work on, creating entire ecosystem for the stock market. One, couple of them, is, just to add here, every country has a securities market regulator. You need a regulator to see that there is a discipline in the issuers and there is no misuse, there is a transparency, there is accountability, and the investors are not taken for a ride. Investor gets information, all of that. So you need a regulator. That's the role of SEBI. SEBI has done fantastic job last 30 years, and today SEBI is rated one among the best securities regulator in the world. We have implemented certain tools, techniques, and technology. The other markets started following us. So we have become a trendsetter in the securities regulation is concerned. So SEBI is doing fantastic job. I don't know. Again, I keep encouraging people, particularly in the finance and commerce, accounting background. Reading newspaper is important for everybody, but particularly people who are associated with these backgrounds, they should read business newspaper regularly. That gives huge amount of knowledge and information which you can apply in your daily life, either professional or in your savings and all of that. That's very, very important. I the other day, Dr. Naresh Reddy was mentioning there is also a session on how to read the business newspaper. It's very good. Since 1992, I'm reading, the Economic Times. When I was staying in the Usmania University, that time paper used to come, in the afternoon. It used to come from Bombay. Those are the days. And today, click of the button, you just touch your smartphone and you have the news. We have evolved so much. So few things which have happened in the stock market is, one is the dematerialization of shares. As I was telling you, earlier shares were in physical form. Today, shares are in electronic form. It means there is a depository participant who is an intermediary. If I am holding shares of X company, I have a demat account, and there is a depository participant who maintains my account like a bank account. There is a demat account. That's where I can see all my shares. When I sell, my broker takes from my account, gives it to the buyer. So again, it's a paperless, electronic, fantastic. So what has happened, because with this, the frauds have come down significantly. That's how it has helped. There is a confidence. Today, I purchased it in the market. Day after tomorrow, I can see, oh, my shares have come. It is available in my account. Like how we see our bank account. I put money. I have my salary has come. Is it available? It is available, right? That's how. So this is one big thing which has happened. Now government has also mandated even the unlisted companies to go for dematerialization of shares mandatorily. It's a very good thing. The demat is concerned. Slowly they will also mandate it for private limited companies. Idea is, trust, transparency, ease. These are the few things. Then the other very important thing which has happened is screen-based trading, online real-time screen-based trading. Maybe most of you may be not aware, prior to, maybe 20 years back, the stock market operations used to be on the physical, in the physical world. There is a stock exchange, there is a place, a place called trading ring. You would go there and shout. Every broker is allowed to go inside. There are 30, 100 people, 30, everybody is shouting. Outcry mechanism. They used to call it the outcry mechanism. Means, you should shout, sell 100, sell 100, X company, Y company. So the buyer would say, I want, then you get into a trade, and then that is converted into a paper, then, all of that. So that used to be very inefficient. Maybe, obviously, we didn't have technology, we were evolving. So that's where now entire thing is a real-time screen-based trading. Again, very, very transparent, very transparent. You can do on your own. We have evolved. Now there are, lot of apps, startups who have built these broking apps. One can easily, become a, sign up for the trading account, start trading. There's a company called Zerodha. I don't know how many of you heard Zerodha. Now, last 4 or 5 years, they are offering this broking account free. Earlier, opening a broking account used to take a lot of time. Everything was centralized at the broker's head office, like Carvey is a broking company, ICICI Direct, HDFC, all these are broking companies. So you go to branch and give all these documents. It would go to Bombay centralization, and they would take 2-3 weeks for opening a broking account. Today, everything is digital. You download, you take a picture, you upload all the documents, your KYC documents. In couple of hours, your broking account is going live. Companies like Zerodha, again, there are millions of new investors got added, post COVID. That's how the space is going on. Then again, stock exchanges, dematerialization of shares and screen-based trading. These two things have revolutionized entire, the stock market operations, stock exchange buying and selling, trust, confidence, all of that. In terms of stock exchanges, we have these are the two premier stock exchanges, Bombay Stock Exchange and National Stock Exchange. We had a lot of stock exchanges. Every state capital would have a stock exchange, but they have become irrelevant in the digital world. Prior to that, it was all physical and outcry mechanism. There was a relevance, but today they have no relevance, so it got consolidated. So we also have few more, but these are the two prominent stock exchanges. From the perspective of investor protection, SEBI has done a lot of work to see that it is not misused. There are a lot of controls they have put in place. There's controls called. They also control the prices. There's also a lot of people game the system and artificially increase the price or reduce the price, so that some investors get cheated. So SEBI has a mechanism where they put the price controls in a particular day based on the that company size, volume. They would say the price cannot go down by 5%, cannot go up by 5%. If every day it is going 5%, they will also again reduce this price ceiling prices, so that there is no artificial jacking of prices. Nobody is influencing. It should be influenced based on the performance, not based on the artificial artificially managing the price like that. SEBI has put in a lot of control mechanism for the investor protection in terms of the corporate governance, putting the independent directors, annual report, annual general meetings, so related party transactions. Like this, there's a huge number of investor protection mechanism has been put in place by SEBI. Again, we are best in the world in terms of today a corporate governance practices. Then there's a concept called, when you buy and sell, there's a concept called settlement. When does the settlement happen? When does the shares goes out, and when does the money comes in? That's called settlement. How quickly that that should happen. Now again, we have a settlement company, so we are in 1+2 T+2 category. If the trade is done today, in 2 days the settlement will happen. If I sell today, my money will come day after tomorrow. My shares will go out my shares will, the buyer gets shares in 2 days. Seller gets money in 2 days. That's called T+2. Earlier again, we used to have 10 plus, T plus 10, T plus 15, T plus 7. We have evolved over a period of time. And then today it is T+2. If you see again, last 1 week, last couple of weeks, SEBI has introduced a new concept called 100% upfront margin. We were able to do transaction without having the margin money. I have say 10 lakhs worth of shares in my Demat account, but I could buy another couple of lakhs based on the broker. Broker used to give that limit. I would buy and then give that money same day, next day. That's what was happening. But a lot of brokers started misusing those shares available in various accounts. That's what has happened in Karvy. A few months back that came out, Karvy started using some investor shares, and they were not able to give back. That's where SEBI has brought in this new regulation. Everybody is trying to adjust to this environment. Unless you have money, you can't buy. Earlier it was permitted, for a couple of days and all that. But today, first money has to be available in your account, then only you can buy. That's what called a rolling settlement. Then the other instrument, maybe people from MCOM and financial management background, they may understand this concept called derivative. Again, we have introduced this derivative in the year 2000, but world over now derivatives are a very, very big thing. Now, where market is moving, for every physical asset, you create a derivative. You create a financial security, financial instrument. Your underlying asset could be a physical asset, but I can't trade a physical asset. Let me do let me build an instrument on it which can be traded. Like there are a lot of examples. Take an example. A bank has given say 100 housing loans. They have taken mortgage of 100 houses, and they have given a loan to these people, 100 mortgage loans. Now if it is as a house, I can only buy and sell, but today I can mortgage. As a owner, I can mortgage and get the money. But the bank which is having these 100 mortgages, they also don't want to hold on that for very long time. They need more money, so they will securitize these 100 housing loans. So they have lent it say 12% for 10 years. So they go to somebody else and say that you can take over this as long as you give me this margin. So that's called securitization. It's also in the form of a derivative. So you are not selling the house or a mortgage. So over that you have built a financial asset which you are able to sell and buy. If you again see, maybe I think 10 years back, US went through a big problem. It's called subprime crash. What has happened there? A one house, there is a house and there is a housing loan. That's how this housing loan started trading at a 2-3 levels. Bank A sold it to Bank B to C, Bank C to D. Nobody knows where is this asset, what is that value, because it traded so many layers. So finally, it has become unrealistic. The property worth $100,000, as is getting traded at say a double 200,000. If there is a default, the value is only 100,000. One can get only 100,000. But the value of that derivative instrument has become 200,000. So that is where that whole market got collapsed. So sometimes some of these exotic financial instruments also are not very healthy. Markets like US, it has gone to a different level. In India, we have not gone to that level. But idea is these derivatives help in a true price discovery. The whole purpose of derivatives is to get the real price discovery. Now we also have derivatives available in the commodities, currencies. In the physical world, trading happening is difficult. Everybody may not want to buy and sell and take delivery in the physical world. Somebody want to do a cotton, somebody want to do wheat. big manufacturers like ITC wanted, they want to buy wheat for next 1 year, but they cannot buy and hold it. But they wanted to see that, they are hedging, they are procuring. So for all of that, these financial instruments and these derivatives are helpful to arrive at the what is the right price for that particular product. That way, this is very good. But there are some side effects. Some people, without understanding this, if they get into this, people lose a lot of money. That's the concept of derivatives. So it is 3:10 now, 3:09. So I have few questions. Let me just take these questions and then I will continue the presentation. Yeah. Yeah, somebody is asking, there, I think you may also have some, I think you also have a separate session on, how to invest, financial planning and all, but let me give a, quick answer. Invested into stock market and mutual fund is same or any differences? So there are differences, mutual fund, there is a fund manager, whose job is to collect money from multiple investors and invest and manage it. He will charge a fee. He will charge maybe 2% of the funds he is managing as his fee. In the stock market, you invest directly. Maybe cost of transaction is very low, but risk also is very high, because unless you know which company you are investing into, whether you know about that company or not, if you are a first timer, it's better to go through mutual funds. You read, acquire knowledge, and then maybe you can invest in the stock market directly. Then there's another question on, is it legal to investing in cryptocurrency in India? It is not legal. Cryptocurrency is not legal in India. There is another question, how we are going to recover mutual fund at Karvy? I don't know what is the question, but say there is no issue. Karvy doesn't have its own mutual fund. Karvy is only a distributor. HDFC mutual fund, ICICI mutual fund, Kotak, Edelweiss, these are all the people who run the mutual funds. Karvy is a broker. If I am an investor, you are an investor, you go to Karvy. Karvy says, these are the, this fund house is doing well, this mutual fund is good. So you are educated and your money is routed to them. You put directly money into the mutual fund. Money you don't give to the Karvy. The Karvy issue I was telling is in the stock market, margin issue, misuse of, shares held in various investors' account. That was the thing. Yeah. So one question, Pallavi Bolla. Sir, how to invest in stock market? Any steps are there? Explain step-by-step process. So as I was telling, there are a lot of brokers like Gen Securities, HDFC, ICICI, Zerodha. You can do little bit research online, but one can look at, for startups, first time who are doing, you can look at Zerodha. Zerodha is a new age broker with a technology he has built it. You can go to your download the app from the apps, and then I think that they will guide how to do it. Generally, they take a KYC documents, and then your account is up and running. So you can literally buy on your own from your mobile. You have to put a margin money. If you want to buy, invest 10,000 rupees, you put that, transfer that 10,000 to that broking account, then it will allow, okay, I want to buy this share, you can watch and buy. So it has become very simple, but you need to study, people who are interested, they can sign up with one of the broker. All the brokers have now apps, very easy to, operate. Take one or two stocks, invest very little money. You want to educate yourself, you have to learn yourself. So best thing is start doing it. Today, as I said, you don't need a lot of money. You open a account, you can buy one share of Dr. Reddy's, maybe I think 3,000, 4,000. One share of Infosys, 200, 300. Like that. So you can invest it. Then, you have to keep watching, what is happening in the stock, how is the company performing. Today, there are a lot of research reports. There are so many brokers, so many research reports which come. There is a site called moneycontrol.com. You can go and see, there are, there is a I strongly recommend, people wanted to understand, finance and wealth, particularly wealth is concerned. Economic Times brings, a Sunday edition. Economic Times Wealth, it is called. It is all meant to the individuals for a financial education. It will talk about your mutual funds, stocks, PMS, how to invest, where to invest, what kind of stocks, what should you see, what should you see. There are earning per share, PE ratios, what is the return on equity. If somebody is generating, equity returns of 5-6%, it may not worthwhile to invest. And if somebody is generating 15-20%, 25%, it's good. So somebody who's interested, you go to Google. Now you will get so many videos, so much of knowledge. You please read, spend some time, start doing it little bit. As you become more confident, you can put more money and watch it. But there's also a lot of rumors around. Once you are in the system, people send you SMS, people will call you. There are so many rumors saying that this will become, will grow 20%, 30%, 50%, in 3 months, 1 month and all that. So you should be very careful, in entertaining those things. You should be convinced, you should be able to judge, why you are putting. Always good to go with the top stocks. NSE 50. NSE has top 50 stocks. They are very stable. Highest amount of corporate governance like HDFC Bank, Infosys, L&T, Reliance. They are top 50 stocks of best companies. They are huge companies. SBI. You can start investing with them, and then as you learn more and more, then you can go get into a medium and small size companies. Then the one more question: can government employees invest in stocks? Yes, absolutely. Government employees also can invest in stock. So, I mean, for you to learn, you can do it. But this also, one needs to spend time on it, in identifying right stock and doing little bit research. Every week or every month, you should review. You have invested 10 lakhs, you bought 10 stocks. But you cannot ignore there. Right? You cannot ignore. You should watch, whether company is doing well, not doing well. So if it's not doing well, maybe you have to exit. And if it's doing well, whether you want to keep it, you want to add more money. So you need to watch. You cannot, it's not like a fixed deposit. It's not like a land, buy and forget. You should, review once in a while, once in a month or once in a week. You should be doing it. So, how to invest in stock market? Any steps they are therein? Explain step by step. Yeah. I mean, you guys can go to online. You will find so much of resources. But you need to read and educate yourself. Yeah, you cannot do blindly. But with a very small amount, you can open the account and start doing it so that you get experience. Yeah, I think this we have covered, and I mean, there are a lot of players in the primary market. I mean, the stock exchanges and stock exchange mechanism, brokers, depositories, depository participant, all of them falls under the secondary market players. In the primary market, you have credit rating agencies, mutual funds. Mutual funds, again, they are the one who collect money from the suppliers of funds. You and me, put up money in the mutual funds, in the SIP and other forms, they collect it. Now you have venture capital funds. These are the, venture capital funds, angel fund, and private equity fund. These are for little, high HNIs, high net worth individuals. Generally, each investor has to put in, 1 crore of rupees, to become a investor in the venture capital. In turn, they invest, if it is a angel fund, angel investment, they minimum they do 25 lakhs, that kind of a thing. And then I was telling you derivatives to trading, I have explained you. Domestic financial institution. In the domestic financial institutions, as I said, NBFCs, your banks, they also raise a lot of money. They issue bonds. Very frequently, they do NCD listing, bonds. I mean, they also need money. So they collect money from suppliers and then they give it to the users. Qualified institutional players or buyers. This is where, this is generally for the listed companies raising money from a selective, institutions. Then the foreign portfolio investor, FPIs. Now, this is another major category where, lot of money is coming. A lot of foreign players who bring in money. Foreign players, when they bring in money, they have an option to invest in the stock market, which is secondary, or it is a primary market, which is FDI. You directly invest into the companies as an equity. Maybe you hold on for 3 years, 5 years, and then, at a later date, you exit in the IPO, make money, or somebody else comes and buys. So that is how the FPIs bring in money, either directly buying in the secondary market, or they put in as a FDI into the companies. So this also we have, we have a little bit, these are the investment vehicles, stock market, and then the mutual funds, insurance and pension funds. Then there's an alternative investment fund. This is where, these are all the little exotic, instruments, and generally, people with higher net worth, go to this, set up their own private equities, venture capitals, or angel funds. These are the vehicles. I mean, there are also a few more vehicles. Now we have the REITs, real estate investment trusts. Now, take an example in the high-tech city area, there are a lot of IT parks where the tenants are the large multinational companies, maybe Microsoft, maybe Deloitte, all of those guys. Some of these large IT companies or MNCs, they don't want to hold the real estate. They don't want to hold the real estate, because their model is like that. They wanted to only keep it on rent. That's how they look at. But some of the investors wanted to see that they also have some real estate, so that there is a fixed return. But as an individual, you may not be able to have a ownership in a large property, 1 lakh square feet, 1 million square feet. So that is where all these developers, they go on list in the market, real estate investment trusts. There, with 2 lakh rupees, you can invest. Now, all the real estate is, part of the trust. Whatever the rental income which is coming, that is distributed to the investor. With 2 lakh rupees, you can become a part owner in an IT park. One, you have a capital appreciation over a period of time. Second, you have a income yield coming through the rental income. So this is how the REITs is coming, real estate investment trust. Sir, shall I continue, or shall we take a little more questions?
Sir, take questions, sir.
Yeah. Friends, please do raise questions so that.
Sir, one person is asking a question from YouTube. Sir, please explain market cap to GDP ratio.
Yeah. Okay. I mean, I think GDP, we all understand. I mean, the gross domestic production of the country. I mean, today we are at $2.2 trillion. Our GDP is 2.2 trillion. So before this COVID, we were at 2.8 trillion, but today we are at 2.2 trillion US dollars. Is all in US dollars. I mean, each trillion is $1,000 billion. Each billion is 7,500 crores approximately if you convert into Indian rupees. That's called your GDP. Now the market capitalization, as I said, take an example of National Stock Exchange. There are I think 6,000 stocks are listed. Every share which is listed for every company, there is a market cap. Your market cap is number of shares outstanding multiplied by price of share. Assuming there are 10,000 shares are outstanding, 10,000 multiplied by 100 per share, 100 example, that becomes 10 lakhs. The market cap of company A has 10,000 shares and a price of 100 becomes 10 lakh is the market cap. So all the listed companies outstanding shares multiplied with the share price of that respective company, you will get the market cap. Now, if you see entire, market cap of NSE, I think that's where I've covered in one of the slides. That's the market cap. All the shares outstanding multiplied by their share price is called market cap. So the relationship between market cap and GDP is one way to look at, is the market overvalued, undervalued, overly valued. Today we are at 70% of GDP, 70% of our GDP, which is moderately valued. If it is below 50, it is undervalued. It means the prices will go up, stock prices will go up. US is at 170%. If their GDP is X and the market cap is, GDP is 100, their market cap is 175. They are overvalued. So the potential to grow is very, very limited. That's the relation between GDP and the market cap.
Sir, one more question from YouTube, sir.
Yeah.
How we are going to recover mutual funds, that is SIP at Karvi?
Sir, I have answered, but see, Karvi is not a mutual fund company. Karvi is only a broker.
Broker, right?
People have invested through Karvi. The mutual fund, there is no issue. The only in the stock broking, where people had accounts with them and demat accounts with them, in some of those shares held, some of those shares they have used for their personal purpose, their company purpose. That SEBI is investigating. I think they have recovered. Most of the stocks have been recovered. They are giving back. That problem is getting addressed.
Yeah, any more questions from participants? Sir, Principal sir, you want to speak something? Professor Chennappa.
Chennappa sir, unmute yourself, sir.
Sir. Professor Chennappa.
Sir, unmute yourself, sir.
Unmute. Yeah, you can speak, sir.
Yeah, good afternoon. This is the weekday program, sir. I welcome as well as to thank you, Raghu Babu, sir. You are the friend of our department as well as to this college.
Yes, sir.
Presently, I'm the principal of this college, and we are running the 7-day program. It is a second day. Wonderful starting. Nice, sir. You are patiently answering all questions which were raised by our audience.
Yeah.
There are around more than 700 plus audience are there in YouTube channel.
Oh.
We permitted only 50 onto the screen, 45, 50, sometimes there entry and exit.
Okay.
Without any making noise. So really wonderful lecture, sir. And we enjoyed a lot, and we welcome as well as to thank you for sparing your valuable time and addressing our audience through online, sir. In coming future programs also, you will be invited. kindly spare with us and do join, not only into web format, any offline mode also. Whenever we invite, kindly do come to department and college and grace the occasion. Thank you
Sure,
very much
that'll
for
be, that
sharing
will
your
be my
valuable.
pleasure, sir. That will be my pleasure. Yeah.
Sir, thank you, sir. On behalf of the Center for Promotion of Financial Literacy and Department of Commerce, Usman University, and my personal behalf. So we are very much grateful to you, sir, for your presence here for the first session. Yeah, it is excellent and fruitful discussions also happened. So thank you, sir. Thank you for your valuable time and your presence here.
Yeah. Thank you so much, sir. Thank you all. I mean, I wish, participants and all of you, all the best for this program. Thank you so much. Thank you. Bye.
Good afternoon.
Sir, continue, sir.
Yeah,
Continue, sir.
yeah. The meantime, Dr. Naresh Reddy is arranging a next lecture, which is
Yes,
going to
sir.
be money market.
Yes, sir.
Then by that time, I would like to give some hints and tips to you. Though it is a online training program for weekdays.
Sir, one second, sir.
Yeah,
Yeah,
yeah.
welcome, sir. Welcome, sir.
Yes, sir.
Yeah, you can continue, sir.
Yeah, yeah. So the speaker has joined. Now, Sekhar is also very soon is going to address under the capital market. I welcome the Sekizar, sir, for this 7-day program. And on behalf of the college and my personal behalf, as a chairman of this RUSA, you are welcome, sir, to address our audience. I welcome you. Dr.
Yes.
Naresh Reddy in detail is going to be introduced to you, sir.
Yes, sir. Thank you, sir. Secretary, sir.
Hello, sir.
Yeah, sir. Yeah.
Good evening.
Good afternoon, sir.
Good afternoon. Good afternoon.
Good afternoon. Yeah, we are very happy to see you through online. Yeah, I want to speak a few words about eminent speaker and practitioner, Sekizar Balasubramanian, Director Deloitte, Investment Management, Business Growth and Mergers and Acquisitions Consultant. Recently, he has performed certain roles in university companies on behalf of the funds, venture capital funds, private equity and sovereign funds. He has served as advisor, board member for IT and IT-enabled services, infrastructure companies and professional services firms. His experience includes serving large manufacturing and services companies. He was also involved in establishing of shared services practices. He has also served as CFO of certain entities, including a venture capital fund. He has been a trainer for directors on the board of companies. He has served as a resource person for ICAI initiatives. He was the co-program director of the workshop for communicating impact IFRS implementation to fund managers and analysts. He has been a regular guest faculty at the National Institute of Securities Markets, Mumbai, Administrative Staff College of India, XLRA Jamshedpur, and a regular speaker in seminars and conferences, including FICCI, ASSOCHAM, including management development programs of large companies. He has been involved in designing global leadership development program of large BPO company and also CFO development for a large group. He was a faculty at the leadership development program of ICIA 2003-7 on managing change and conflict. He has served as committee member, secretary of Hyderabad subchapter of International Fiscal Association and AP Tax Bar Association. He was a special invitee to Accounting Standards Board of ICAI for the year 2009 and 10. He was a co-opted member of the Committee on Accounting Standards for Local Bodies and Editorial Board of ICAI, New Delhi. He was the Regional Council member at ICAI South during 2013 and 16. He has been also a faculty for CPA USA program for many years. So, in addition to that, Sekija sir is the best friend of the department and regularly are visiting in different conferences or workshops. Sir, we are very much grateful to you, sir, for your time as well as your presence here. Thank you, sir.
Are you able to see my screen, sir? This
Yes,
big
sir.
screen.
Yes, sir.
Yes, sir. Yes, sir.
Is it moving, sir?
Yes, sir.
Yes, sir.
Okay.
Perfectly.
Good afternoon. So thank you very much, sir, for inviting. I thank all Mr. Naresh Reddy and all Mr. Krishna Kumar and everyone to have.
Sir, 1 minute. Mr. Kumar sir is here. Say good afternoon. Hello, sir. Hello, sir.
Hello, sir.
Yeah.
He has betted on my performance in the next 1.5 hours. I have to see that the valuation goes up.
Yes, sir. Sir, thank you, sir. You can continue.
So, good evening, participants. My association with Osmania University goes back for many years now, even before 1999 or 97. I thank Dr. Naresh Reddy and all the senior faculty of Osmania University Commerce Department for having given me this opportunity to share my thought. However, I should put a caveat that I had almost about 5 to 8 minutes to decide on sharing my thought, because over phone they closed the deal. So, and whereas I have to speak for 1.5 hours, and my knowledge in money market would go from 0 to -3. I wouldn't put 0 to 1, because my understanding about money market is, I would say, because I work in what is known as long-term market, not short-term market. This is a very short-term market, and as such, I mean, by now you all would have had some understanding on these markets. You know, what is the market, territory, then participants, then regulator, then instruments, then governance, information. So variety of aspects are there in so far as the markets are concerned. For demand, supply, intermediaries, and so on and so forth. But this money market is a very interesting market. I think we all should focus on understanding this money market, at least from a from a risk return perspective. However, though it is a substantially institutional market, I will take some time to dwell on this, so that my understanding of the overview. Where the financial instruments are traded, high liquidity, you will find, it's like over phone, they will call and have a discussion and then close the deal. And later on they send the email confirmation. To that extent, it's quite volatile and highly risky. And you can arm twist the other party either way. Who is in the receiving side? Who is in the ending side? High liquidity and short-term maturities. Very highly. Overnight rates. Daily rates, morning, evening rates, and within 1 minute rates can change. If the policy announcement is there, it can change in minutes. The rates can change in minutes, and global rates are interconnected. Japanese rates, Singapore rates, and you find from early morning from the time New Zealand opens, then Japan opens, then you have. So the rates keep varying. International rates keep fluctuating according to the global market's reactions. Very short term. This is a highly short term market. Maturities, and it depends on the type of instrument which you are trying to deal in this. Short-term maturities. So part of financial market. This is part of financial market, so I don't need to get into more. So 1 year or less, such as treasury bills. So the period is about a year. So maximum is a year, and treasury bills and commercial papers. So we need to understand whenever there is an instrument, we need to know who is committing and who is having the right, who is having the obligation, and what is being committed, and how is underlying asset is having demand supply equations, and how does it affect the yield and the related valuation. So over-the-counter trading is done in the money market, and so over-the-counter, it is a very highly and it's a wholesale process. So you have institutionals participating as much as possible, and you find that in unorganized money market, you find individuals participating very actively. So you have many situations. For example, today in an unorganized market of money, other than which goes through formal channel, the currency which is written as I promise to pay. So that has a rate in the short-term market. So again, it can vary anywhere, depends upon the urgency and requirement. So you find people buying morning and giving it back in the evening, depending on the purpose for which they are borrowing, and their credit worthiness and word of mouth. It is used by the participants as a way of borrowing and also lending. So it's both ways. You find people having liquidity, trying to infuse that into the market so that they get some return. So this is where we had some problem during Corona period. Some of the mutual funds have to collapse. The short-term mutual funds got into problem, and then RBI has to step in and salvage the situation. And this you need to understand, because this has a very high, high volatility. How volatility depending on the situation. So you have substantially the bigger ones are treasury bills, commercial papers, and CD, certificate of deposits. And you have a variety of derivative instruments depending upon how you use that instrument and how you make the buyer of the instrument and understand that instrument. So, but organized market, these are the organized area: treasury bills and commercial papers and certificate of deposit. There are other instruments which are also not listed here, but short-term has quite a bit of complex instruments in an unorganized sector. Commercial papers to raise money. This corporates whenever they need money, they need to go ahead and issue sell the commercial papers, and you have variety of processes in this. And it is generally considered as safe. When two parties are in good terms, everything is fine. When two parties are not in good terms, everything can go haywire. When you say highly safe, it can also be highly risky, depending on the way how the markets are moving. For example, if there is a war, between two countries, depending on which country, then you will have suddenly this market gets into problem because of safety concerns. And I remember some time back when Japanese and when there are elections, also because there is uncertainty regarding the political policy of a government, depending on who is going to be in the power and who is going to be in the ruling party. So this though it is considered very safe, it is also highly risky also, and one has to factor this into the model. Liquidity is very high. This is because people don't want to keep the cash. They want to deposit in the system. This is one of the reasons why you will wonder why Ola and Uber are being valued very high, because Ola and Uber are taking money from the customers and giving it back to the drivers over a period of time which is defined. So you may think you are paying to Ola, but you are not paying to Ola. You are putting the money in the short-term money market, which the Ola will take it. That means you are spending and they are taking it. So they will have an instrument back to back on this for X number of days. So this changes the valuation depending on the traffic of passengers if the corporate treasury is managing the treasury correctly. So this is liquidity is very high, and transactions volumes are very large. Trading takes place over the telephone, after which written communication is done through emails. For example, many years back, I went to a particular company, and when I went into the board meeting, I find unknown to me, there is a very huge fraud taking place, and the board was informed then and there in front of me. And one of the role of auditors is finding fraud. But in that company, you have highly liquid derivative instruments taken over phone, but they never had an internal control of somebody validating within 10 minutes or 5 minutes independently. So this every 2-3 years, the CEO gets sacked, the whole team gets, because that internal control goes haywire when somebody is taking leave or when there is organized fraud which is taking place. So when a transaction takes place over phone, and a written confirmation is done by email, there is a time gap between that. So one has to understand that this has a very high risk for internal control in certain companies where you need to have proper systems and checks. And participants include banks, institutions, mutual funds, investment in new institutions, for example, asset management companies, AMCs, and central banks. Say foreign banks are actively participating in this market, because today you have interest rate in Japan negative, you have interest rate in Russia negative, you have interest rate in London negative, the interest rate in US is 0. The only market which has a decent rate of return are Singapore and India. So this is a very huge market. And they actively participate also in every market. For example, our central bank also will participate, and you have Singapore funds here, you have Russian funds here. The fund managers act, they don't want to keep money idle, so they want money to work for them. So you have this is a huge area of understanding when you want to make a career with. I work with sovereign funds, so I am familiar with some sort of model which they work on. So they have huge money. Some of the sovereign funds have money which is more than the 2-3 countries put together. And in India, we have institutions like LIC, we have institutions like mutual funds, which have huge money when compared to the banking system or the Reserve Bank. If you take the total of all money which is put together held by all mutual funds, assets under management is anywhere around 26 lakhs crores. And depending on the opportunity, they cannot be, keeping it idle. And LIC is one of the largest investor in India. And banking system has huge funds. Today we are having what is known as excess funds. People consider it safe to be putting in fixed deposits, so on and so forth. So what is the risk we are talking about? The risk here is, default on securities. Anything can go wrong, depending upon the validity, who is the issuer, what is the problem he is facing, and what is his credit worthiness at this point of time. So default on securities is one of the biggest concern one has to look at, because if the current rate is changing in favor of the defaulter, and if the defaulter is going to get benefited because of not honoring, it can go current rate, and the committed rate can change this, and you have derivative instrument covering that also. So various financial institutions get involved. Anyone who has cash, anyone who wants cash, anyone who trades in cash, anyone who represents somebody else to take care of their financial risk insofar as the liquid assets is in this market, and including unorganized sector. You have people, as good as betting on, whether you have Sachin Tendulkar going in and coming out. People bet on that, with reference to whether he'll score 50 or not. So, I won't say it's a financial institution, but it's a risk. In a way, they bet on the currency is there. Currency changes according to the time factor and what is the rate, what is the underlying thing. This unorganized market also has this type of features. The dealers are huge. This market, particularly organized segment, you have dealers and borrow or loan securities, and best resource to invest liquid assets. This is overseas overnight rates. Overnight rates keep fluctuating. I remember once upon a time, the stock market got into a problem because the overnight rates went up. When overnight rates went up, people move away from securities market and move into liquid cash assets. So they sell the security and they move to liquid assets. So obviously, because the rate of return is high, so market crashed. So we need to understand the relationship between short-term markets and long-term markets. So that has a very large indication. So one has to know how the markets behave. See, the money market is also unregulated in the sense there is in India you will have about 30% of our country's money may be unregulated. So you have a huge, not only 30%, maybe I would count it as depending on how much churn which takes place. For example, retail. If I have to buy kirana, I have to buy kirana every month. That means the price of underlying kirana also has 12 times multiplies. So people like to lend at that rate. For example, a Kelawala. A Kelawala is in stock market, in money market, because morning he goes, buys 10,000 rupees, Kela, he puts that Kela on the bandi and he goes and he sells it for 30,000 rupees, 10,000 rupees bought at 3%, and end of the day he sells it at some 3 times, 4 times, makes about 1 lakh of rupees. The rate is huge. And morning to evening, so unregulated. Even the people like, people who come and the ladies who come and have servant maids, or ladies who work in the unorganized sector, they have chit funds and they have daily spending. Unregulated is also there. Regulated is also there with reference to the organized sector. Then this is also one-way informal market and not structured like the capital markets are more structured because you have risk and reward. Because when everything changes overnight, very difficult to regulate. By the time RBI understands what is happening in the market, it would have been already gone, washed. Like what happened in the case of that mutual fund, which collapsed. So variety of products. The rate of return is very small. The rate of return is very small because of the type of churn which is taking place and the time period. and variety of products. You have all types of products here. Now we'll go into that few things. Withdrawing money from the money market is easier because it is liquid, highly liquid. For example, if you see the March 23rd crash of the stock market, it was so steep. It was so steep. After March 23rd is the only day where the market across the globe bottomed out, not only because of money market. Stock market came down. The commodity market came down because of oil prices. So the spiraling was cumulative. People are trying to pull money through money market. People are trying to pull out money from stock market. People are trying to take safety positions in oil price because oil price crashed. So you have a huge derivative markets. Derivative was completely disaster because derivatives, when they fall very steep. They fall very steep. Capital market generally, what capital market do is they discount. They are supposed to be a long-term period, but the way they behave, the long-term period, though is capital market is for long-term, everything is in long-term, we are all go to graveyard. That's what they say. But in capital market, the brokers and the institutions and the participants, they discount it. They discount it immediately. So you have the variation between money market rates and rate of return in the case of capital market getting discounted on an ongoing basis. There's a link between these two rates, and that rates also keep fluctuating in the both option futures and derivative segment. They keep balancing that. And then you have a market for mortgages also. Then you have agencies which deal with that mortgages. And if I don't have collateral and I want money, but there is somebody with collateral who will provide me collateral, and there is a rate for that. There's an agreement between the parties, and you have option also. Lender has the right and no obligation. If I promise to pay you, but I may not pay you, but still I can work on that type of rate obligation also. And at a charge, you have a rate for that also, with reference to such type of promises. Suppose my friend wants from the market 2% some money for next 3 days. So there is a way by which we can deal with that. So there is something known as security deposit, certificate of deposit. CDs work very differently from commercial papers, but it is like a deposit. Okay, it is like a FD, but like in this case it is 100% money, whereas in the case of a commercial paper it's like it is more like an instrument of promise to pay and like that vis-a-vis. Here it is money, bundled money as a product, but you keep selling and buying that particular instrument which is already accumulated, and then maturity date is explained, and the liquidity. So one has to look at that. It has lower liquidity when compared to the former. So this works like a promissory note. So up to how much time I have, sir? So this type of money market instruments as a promissory note, it is unsecured and can only be used to a large cap companies with a renowned market reputation. The maturity of this debt instrument lies anywhere between 7 days to 1 year, depending upon the rate of return. The lower rate of return, because the longer the period, the return will be slightly high. Shorter the period, the return may be slow because of the relative availability of cash for a longer period. It gives you better return. Maturity period of the debt instrument lies anywhere between 7 days, 1 year, thus lower rate of interest. And it has multiples. Whatever I know, I have put it, but it keeps moving on. And maturity date may not. Once the rating, it's based on the rating also. It is linked to the rating also. And these are only issued by central government. This is again the treasury bills. The treasury bills are issued by government, and government of the country which requires funds to meet its short-term obligations. If government needs money, it issues treasury bills, and if it finds that there is they works, I mean, they issue or they depending upon they sell the treasury bonds if they want more liquidity. These securities do not generate interest, but allow the investor to make capital gains. So you need to understand, because there is a capital gain involved. So when you buy and sell this, you have capital gain, because it's a derivative instrument where you have asset value, net asset value. Treasury bills are an optimal investment tool for investors looking for an option to minimize the risk, because in this case the risk is little lower because it's already bundled cash. So to that extent, risk is low, and because the person who is issuing it is government, it is likely to have lesser, because as far as government is concerned, whenever government gets into a defaulting mode, all it can do is print more money and supply. So that is why the risk of any government security is considered to be very low. Default rate is negligible, thus serving as an optimal investment tool for example, I know what is happening in United States Treasury. Right now, United States Treasury, we have to watch in the next 3 months to 5 months because of the elections which are there. With election date is you are able to hear me?
Yes, sir.
So report is the central bank of the country. Hello? So you are able to hear me, because my here it says internet connection is unstable. Okay, thank you. So there are 2 people are entered waiting room. Kindly check whether I think I have to see this. So repo rate at which the central government of the country lends money to the commercial banks in the event of any shortfall of funds. So this is a very interesting thing, because this is not only, while I may consider this as a slightly out of context, but I need to talk about this because this is also in a way money market, because this is between central bank and the banks. So RBI, central bank of the country, has lends money to the commercial banking system. So there is a rate at which the RBI lends to money to the commercial bank, and that also falls, I would say, repo rate. So the rate at which central counter lends money to the commercial bank in the event of any shortfall of funds, repo rate is used by monetary authorities to control inflation. So if you find the excess liquidity, you will do in such a way, that is the repo rate, and reverse repo rate as a case may be, that which we'll see. Now currently it's around 4%. This slide share, I think I'll change it for a minute.
Sir, you want
No,
to...
I think, no, edit, I need to say edit slide. there is one feature which Zoom is having, where if I have some slide issue, it says allow edit. There is a program error here.
Yeah, yeah.
I'm sorry, give me 1 minute. I'm just trying to see which button has to be there. You know, there is one feature called edit slide, and unless I activate that, this particular slide
Edit slide option.
will not move. I'm sorry.
Okay, okay.
One second. Yeah, anybody familiar with this from the? I'm sorry, there is some issue here.
Sir, please stop the screen share and.
Is it coming?
Yeah, is it coming now? But if you want to.
Slide is coming, sir.
Yeah.
Is it coming, sir?
Yes,
is it coming,
sir.
sir?
No. Yeah, sure.
Is it coming?
No, sir, not coming.
Now it's coming, sir. 1 second.
Minimize this. Screen share stop this.
It's coming, sir. Coming.
Yes, sir. Yes, sir. Yes.
Is it coming, sir?
Sir, Shaki sir, it is coming.
Is it coming, sir?
It is coming.
Yes, sir. Yes, sir. You can continue.
But it's not moving, sir.
It's not moving.
It's not moving.
Sir, you can minimize and continue, sir.
I will do one thing. I will continue explaining without the PPT. So this repo rate, can you hear me?
Yes, sir.
Okay. It's currently is around 4%, and short-term availing funds to repay its future. So generally, it's used to by the Reserve Bank of India when banks are not allowed to. I mean, the repo rate and the reverse repo rates are very, very commonly used by the Reserve Bank of India. And then you have these repo rates and reverse repo rates are highly volatile and high risk, and one has to be keep watching it on a daily basis, because RBI monitors this almost like on an hourly basis, and they try to keep looking at the liquidity in the markets. And with reference to short-term money market, this up to what time I have time, sir?
Hello.
Up to what time I have time, sir?
5, sir. 3:30 to 5.
Okay. So if you see the market, this is highly volatile and high risk, and the underperformance is very high, which means you can make losses, because this when you are in the short term, it can go either way. It can go either way, and hence the volatility is very high. And generally, the government securities are expected to give a higher rate of return. So the government securities in money market, particularly short term, is because the risk out there is low. Risk of default is low, and consequently, the liquidity, the so-called return risk return. See, the 3-4 factors which play a major role in the yield of a security, and also the success of the security giving a better return. So the government securities are generally considered to be safer as against any other security. To that extent, in the money market, the government securities are higher, generally give higher return. And mutual funds. You have money market mutual funds, very, very big area, money market mutual funds. And money market mutual funds, I remember way back, I was traveling with a fund manager, and that fund manager, I was discussing about a potential issue of a very large listed company, DLF, or when... Hello? Yes? Sorry. So money market mutual funds are a very big area, because the money available with mutual funds is liquidity available with mutual funds is so high, and either they put it in the money market or they put it with banks. So when that particular IPO came, I was predicting that money market mutual funds will park the funds not with the banks, but with this particular IPO, instead of keeping it in the liquid market. So then you find a substantial fall in the market with reference to the rate of return, because the money moved to the capital markets. So these funds, mutual funds, keep money in this market because they have to balance between cash available with them, and also the so-called cash available with them, and also employing the cash. So if I employ it with a bank, I get a little lower rate, because banks do not give that much return as against these particular instruments, which are other instruments which are in the market. Very short term, and this money market mutual funds, and AMCs charge a fees, and many of these instruments have capital gains, and so on and so forth. NAV of the fund keeps fluctuating. Okay. So broadly, that is the, and as I told you in the past, money market instrument, which are the common challenges which are there, is high liquidity. That means there is always a link between money market and the bank fixed deposit savings bank rate. So you find that if I put the money in the market, I take a higher risk. And if I put the money with the banker, I'm slightly more comfortable because it is less risky. But I would find that the rate in savings bank is far less when compared to the rate which is offered in this market. But again, banker also has to manage that money, the cumulative amount of money which he is holding. high return because the type of return which is coming is keeps churning the thing and vice versa. And in a time like this, for example, in India today, Corona and international instability regarding political environment and also economic outlook, because we find still people are not gone to office, people are not spending, and things like that. And companies' performance are not guaranteed at this point of time with reference to their own financial performance. So find this, when the volatility is very high, better to avoid these markets because you have a high risk of failure and consequently the yield will come low. So I think I fairly covered and summarized as much as possible. But I would say that at a very high level, while I would say that I don't participate in this market because of my involvement in the long-term markets. But one has to understand that instrument. See, whenever you do financial instrument, I remember a long time back, way back in 1994 or 93, I spoke in Calcutta on financial instruments. So when you have a financial instrument, you need to understand the characteristics of the instrument. Without that, you should not get into the instrument. And then complete the risk return profile of the instrument. What are the participants which are playing? What is the overall economic outlook? How is the demand supply of that instrument? What are the underlying there? So in the case of money market, while you have a lot of products, but you need to know the risk and reward and the maturity cycle of each of these products. And considering the fact, this is why I always find, today I can confidently, though I am from Mumbai, I am happy to be in Hyderabad all the time. I'm supposed to work out of Mumbai office, but we have all the people are resigning. While globally people say no job, economic outlook, no job, GDP is coming down. In Bombay today, the international funds have come, not less than 3 lakhs crores. Additional funds have come into India in the past 3 months. So this is making investment climate look very attractive in Bombay, because when it rains heavily, it takes time for the water to reach to the ocean. So today it is pouring like cats and dogs in Bombay. Money is there, too much money is there, and it's high liquidity is there, and we don't know how it's going to affect the markets in the near future. And you need to, whenever you deal in short-term markets, you will be tempted to move to securities of different variety. But you need to understand 0.1% to 0.3% is 30%. It is not a small percentage. 0.1 to 0.5 is very huge. If you say 0.1 to 1 is a very drastic movement. So whenever you get into this market, the rate of return has to be seen very, very carefully, and you need to be very careful with reference. 0.2 can become 0, 0.5 can become 0.2, which means downfall is very steep. This is why one has to study, how in money market and capital market, 0 can become infinity, or 0 can become minus 200, 300, and so on and so forth. And you need to also watch the rating, very importantly, the rating of the issuing company or issuing institution has to be seen, because the rating keeps on changing. And if the rating changes, then the underlying security valuation changes, and you need to, certain instruments, you need to revisit that instrument itself. So, and over the counter, when you do over the counter trade, the important feature is what is being understood by the buyer and the seller. So again, over-the-counter markets are very dynamic, and you find wholesale people. See, in this process, you have AMCs, you have banks, you have Reserve Bank, you have multiple institutions participating, mutual funds, and wholesale process. You should know the persons. I don't know how Mr. Kumar got my name, but maybe he didn't get, his, I am a short-term product for Osmania University. Whenever they get into a crisis, they come to me. Otherwise, they do a long-term commitment. When they know that this topic I only has to be invited, they call me. So in this case, I feel they didn't get any good, any speaker. I should have recommended them to speak to some commercial banker who is in treasury in Hyderabad, or some State Bank of India treasury person, or State Bank of India stock college. But institutional sales market is a very different market. In the institutional market, you need to know the people, you need to know the trade, you need to know the institution which you are dealing with, and what is the sentiment in the market. What is the State Bank of India thinking about interest movement? What is Reserve Bank of India thinking about the liquidity in the market? Is it increasing or decreasing? For example, in the first 3 weeks of Corona, the Reserve Bank of India has been asked to pump liquidity into the system because of the fall in the market. So excess liquidity, they have to see how to curve out some money. And after some time, they find that the markets are very steeply not having liquidity. They pump money into the market. My policy announcement are there because they need to keep making the demand side alive. So interest rate changes have been made. And the wholesale institution, it is an institutional process. And mind you, in places like Hyderabad, you have unorganized money market. You have locality lending. So Secunderabad people won't lend to Banjara Hills people. Banjara Hills people will, is different from Jubilee Hills people. So you have a very different unorganized segment, which is also there, which is not very visible to you and me, but it is very much existing, and there are participants, and you need to know the dynamics. That's why in this market, information is very crucial. For example, I'll give you, sometimes I don't pay my telephone bill. I leave it purposefully, not pay it. And within the third day, one bank will call me, sir, do you need any money, sir? Loan, sir. That means data is shared. And data is wrong because they are getting fooled because I am lazy to pay the bill, or I just want to enjoy life and then see whether somebody calls me. So then I know who is sharing information with whom. Because information is very, very powerful in short-term market. I can tell you that much because, today, multiple funds are into Indian fund market. So one has to carefully watch the market to understand who is coming here, what is the supply side story, what is the demand side story, and so on and so forth. For example, you find that the retail across the globe, you have about 15,000 retail outlets have closed down. When you close down the retail outlet, that means money market is completely disaster there because no churning of money on a daily basis. That means money is not coming back to the system. Everything in the inventory is lying down. So that is why you find this case, you have this Reliance case. Reliance went and bought this Kishore Biyani Future Group. Why? Because they got money from global markets. They had about 100,000 crore. And they could do whatever they want, but I'm sure that Kishore Biyani group had, the Big Bazaar group had certain derivative instruments and liabilities, and they are doing overnight, buying and selling, and the inventory is not moving, rotating, and obviously the complete disaster with reference to obligations. If you see, the rentals have fallen, and the leases are in trouble. Because you don't want to honor the lease because I have a obligation, so I don't want to pay. For example, many stores have been closed, and today, as I speak to you today in Hyderabad, you have retail stores exchanging hands between two large groups. So because the inventory is supposed to move, but it has not moved, and there is a deal between two people in Bombay. There is a deal between multiple people across India. You have a very completely different dynamics. Money market dynamics can affect many businesses like retail, food, or unorganized lending. So this is a very different, topic which we are discussing with this unorganized side also. And as I summarize and wait for some questions to come, I will only tell that if the risk profile is low, you expect a higher return. Treasury bills have a better return because though it is short term, you have an assured return, which means it is de-risking the area. And the third, the commercial paper market is again a very different thing, because commercial markets, you find people see opportunity. At the moment you see that this particular company is suffering with liquidity, you expect the stock to go down. So you immediately go and issue a CP paper and you go and buy the stock. I mean, you have a variety of link between this particular the particular money market and also the security market. So I think as faculty and students, you need to know the institutional market very well. You need to study. You need to. I am quite sure nowadays you have in Hyderabad also very organized. Hyderabad and Bangalore now have become, Chennai have become, because 1 hour flight from here to Bombay. So you find quite a bit of fund managers, because in Hyderabad we have Anusha. Okay, so in Hyderabad you have very large companies, listed companies and unlisted pharma companies, and they have treasuries, and those treasuries are also participating in the money market. So as a student or as a faculty, you need to know that Hyderabad is playing a huge role in this, because of these pharma companies and some of the technology companies in that domain. And then participation by emails is another area where you have control angle and you have some discipline angle, you have risk. So you have to see that, and the mutual fund side, again, you need to see with reference to liquid mutual funds. And I request you to, those of you who are doing any thesis, I want you to go into the collapse of few of these liquid mutual funds during the Corona period in the first 3 to 4 weeks. 6 funds have closed down. They must have parked money in the money market where the rates went down. So if the rate I am expecting and the rate really coming, if I had committed and anticipated a higher rate of return and I parked the money in the short term and that rate went down, my mismatch between what I promised and what I'm returning, overall fund would have got into problem. That is one of the reasons why a couple of 6 mutual funds of a particular mutual fund collapsed. And you can also be a dealer, quite a bit of dealer. There is a very active market in dealers, and people deal. For example, last week I had one of the very serious senior fund managers in Hyderabad called me and was discussing with me the variety of instruments he is having, and whether I will be interested in looking at those options. So dealers actively participate, brokers and institutional dealers, and again. See, you may think this is what is there in short-term liquid funds, but if I get return over a period of 5 months or 8 months or a daily basis, 5 times, 6 times to rotate it correctly, I make a huge return. But it can also be reverse also, negative also. One has to be careful on that. And I would advise all of you to check with the unregulated market. Now, if you have any friends, you can check with them that whether people are lending at what rate, pure cash with collateral, without collateral, no underlying asset, and what is the cost for underlying asset guarantee type of thing. So you, in a way, informal markets, you need to understand and you need to observe. You need to observe how people are lending in the nearby places, And but again, the unorganized massacre is one of the lowest rate. But again, there the rate between the organized and unorganized will always have about 40%, 30 to 40%, because being the effective tax rate and the rotational area. But unorganized market rates are far lower when compared to organized rates. And I would say that if you have money for long term, then one has to, if you're in the treasury of a large company, I would advise people to participate in the market, because the resources should not go idle. But again, the cash flow projections have to be very careful. You can't park long-term funds into short-term market. Sometimes market goes down, it is very difficult to get the return back. And one has to do a lot of research on private agreements. You know, people get into instruments. Today I got a call, somebody wanting to give money for some rate. But again, who is giving? What is the face value? To whom he is giving? And what is the underlying rate which they are agreeing? And it's very complex. Okay, so you have all types of instruments floating in the market, in the short-term market. But if I say that CD market, I would say CD market is also a very interesting market, but CD market is definitely one level below the treasury market, treasury bonds. So CD market, I would say, is much safer when compared to CP. CP has its own process to issue. I'm not familiar with that though. So with this, I think I will close, because I feel that fairly I've given some thought process. So I would request the organizers to open question items in the chat box, and then see whether any comments are flowing. Otherwise, somebody has to speak and read out the questions. I will make an attempt to answer, though I'm not an expert in this topic as much as a banker would be. So can I see the question chat box or question mode? I'll open the chat box or question. There is no question answers. I don't see any questions flowing. The treasury bills are issued by government. So government, I will pay you cash, and treasury bills are promised to pay by government. So what happens if I have excess liquidity? I will take out this liquidity, or I will pump liquidity depending on by either selling or buying treasury bills. So this I covered during the bill. And treasury bills generally get a better rate of return when as against commercial papers and certificate of deposits. And organizers, I think most likely they will all put it in writing only. It looks like you can open up, but I would prefer if you participate in this. But if I have to cover this with, if I have to compare this market with stock market, I would say that in stock market, the relative instrument closer to will be derivative instruments. You have options and futures. And also mutual funds, for example, the money market mutual funds as against equity mutual funds. So you find they are also liquid, but there will be a gap of about 2-3 days there in settlement dates and things like that. So that is quite different from if you hold cash, it's different from you have money in deposit. You have to go to the bank or you have to do electronic transaction. So it involves some sort of a gap between the buyer to seller or transferor. So you find highly liquid so far as the money market is concerned as against the equity market is concerned. But today equity market also have what is known as SGX Nifty and so on and so forth. You have one layer above that, and you have multiple instruments on mutual funds and so on and so forth. So in a way, treasury bills are not market instruments connected to an issuer other than government. So they are all treasury bills are connected to government. So they sovereign promise is not likely, it's unlikely to evaporate. So I think fairly I covered all the areas, and if you see the link between this and gold prices, for example, gold nowadays, gold is supposed to give a better return when liquidity, excess liquidity is there, and you find money value in stocks coming down. People would prefer a safety over liquidity. So if you find that way, a lot of money has moved to gold in the recent past. So you find commodity that comes under commodity market. So when there is excess liquidity, you find excess liquidity going into safe area, which is called a safe area called gold. And if you see the land prices fairly have been stable, except that there are no buyers. So land is a very highly illiquid asset. In the past 1 month, you have real estate investment funds which have come into the market. So real estate has been converted into an instrument, and that is a long-term asset which has been converted into a liquid asset. So one has to see how that is going to flourish in India. So that's a new concept which is there with reference to long-term assets derived through a derivative instrument. Any other question? I think I would thank the organizers for giving me this opportunity. And any other question is there, I would always, if you can send me emails, I will be happy to. And you can do more research, and I feel you should constantly look at it. For example, why is the repo rate and reverse repo rate, bank rate, connection between all these things, and then CD rates, commercial paper market, how it is happening. You should constantly watch. My humble suggestion to all of you and those who are faculties, my view is that while I have been a faculty for many years, even today I don't know many things. It doesn't matter that, but my students are much more smarter than me. But we need to see that we encourage students to participate in discussions and ask them to get into the real life, because when you read, you learn so much. But when you observe, you learn more. But when you actually regularly get involved and understand this, you learn really more. When you're doing it, you learn more. Doing and learning is more different from actual. So you tell people, okay, what is going to be tomorrow's rate? What is going to be last 1 week to this week? What happened on the rates? So you need to involve the students on real life situation, and then you can make them learn better than making them just come. And interactive learning is a must. You need to have case studies. You need to ask them to do group studies, and you divide them into groups. Divide the topic into three topics. CD, what is CD? Then then they will come out with better. They will get with better understanding and better discussion, and you will find suddenly class is totally vibrant. You find multiple points coming in this. Okay. With that, I think I would conclude, and I would like to thank the organizers for giving me an opportunity to share my thoughts.
Yeah, anybody wants to raise some questions or doubts?
I think I completed earlier. What?
Sir? Hello?
Do you have any more? Sir, do you have one more session?
Yeah, we have 2 more sessions, sir. 5 to 5 break.
Do you have faculties already ready for that?
Yeah. Okay, sir. No problem.
No. Otherwise, I will. dwell a little more on my prediction of what is going to be the future of interest rate in India.
Yeah, that we can share, sir. Another 20 minutes are there.
See, I'll tell you what will happen, what I think will happen in India in the near future. So in
Yes.
the next, today to another 30 days, the interest rate in this country is likely to go down because of excess liquidity. So because the money has come in and all constituents are flushed with money. Please understand, the Reserve Bank of India and the Government of India have made efforts to make the small and medium and common man to have more liquidity. But unfortunately, our bankers don't want to take risk. So bankers don't want to lend. So that means money is in the banking system, deployed, ready to be deployed, but not deployed. So that when more funds are coming to India, the interest rates are likely to fall. So we expect, for example, I remember way back in 1997, interest rates used to be 18%, 21%. Then we allowed foreign funds to come. And we allowed foreign funds to come, interest rate came to 6%. 6%. Imagine the difference between 18% retired people holding money at 18% and suddenly they are having 6%. What is their fate? So you find, I expect the Indian interest rates in the short term to come down. And that is one big area. And then stock market. What will be the future of stock market? The stock market is a long-term market. So when stock market is relatively a long-term market, but we have October results are going to come, and definitely these October results for almost 2/3 of the market is not going to be great because companies are not doing well and people are not buying items, except information technology and other areas. You find the stock market is also likely to not do so well. And hence you find that banks will be under pressure to deploy assets. So you have profitability of the banks getting into a problem. So you find that they will run to the Reserve Bank and say, boss, we have excess liquidity. So you have a very interesting scenario insofar as the money market is concerned in the current scenario, and consequently, the asset prices, commodity and real estate prices are likely to be under pressure because liquidity is not there. You find sellers are more and buyers are less. You will find about 1/3 of that segment. For example, today you find in Hyderabad, rent is not yielding. So you have 4 factors of production: land, labor, capital, and entrepreneurship. So you find people trying to, I want to start a company, I want to do this, I want to do that, because there is people with money want to invest in startups. And you find that segment of business likely to do well. And when compared to international markets, Indian markets are going to do far better because we have about 135 crore people. And obviously, when international fund management is in crisis, and that will come into India. But one area where it is still not factored is market is not I would say, really not the merger of banks. What happened in the past few years, on 31st March, few public sector banks have been merged. So when public sector banks have merged, you are having NPAs and the valuation difference is there and stuff like that. So that has not come into the real money market. So you have treasuries of 2 banks merging. You have two multiple banks. So that impact will be there from now to December, though partly it would have been factored, but the impact of the same wouldn't have been played out in the marketplace. So that impact also has to be seen, how the rates are going to behave in the near future. So with that, I think I will conclude my observation on the quality of liquidity. But if you have to see risk, I would say it is going to be, markets are going to be more volatile because of international political. Trump re-election is a very big uncertainty which is going to affect the markets, and consequently, the U.S. rates are if you see the US rate, it is 0. I don't know, all of you should look at going to USA and borrow money from the markets, because zero can be either 1 or it can be minus. So the reference to US, it is, I don't see plus, I see minus only, unless, so the challenge there is how this will affect our rates. This will have impact in our rates also, and I'm sure that Singapore rates are around 3%, 2-3%. So Singapore is also a market, because India and Singapore are very closely aligned. Singapore market and Indian markets, and I don't think a very active money market in Mauritius, but Mauritius economy and Indian economy are getting closer because of money market. But Mauritian also has dried up, funds are dried up there. So my view is Singapore is also another attractive destination for this money market, which are used as a en route to India. Either funds come to India through Singapore, or they go back to Singapore and then go to the rest of the world. So I find that the Singapore market's interaction with Indian market is also a very, very interesting thing. I had been to Reliance, and the Reliance Industries treasury. Reliance is not a company; it is a treasury, and they have oil prices, they have stock market prices, they have unlisted securities, they have listed securities. They do all types of derivative instruments. They have all types of interest rate. So what I'm trying to tell is that in the case of Reliance, one of the asset today they are holding is money, and that money, for example, we had a situation where 29,000 crore is the money which Reliance has withdrawn from its treasury banks and then deployed for this deal, with this Kishore Biyani's deal. And people are speculating how that is going to affect the bankers with whom Reliance is holding the money. And before that, when Reliance repaid 1 lakh crores, the banks which have lent money to Reliance, their profitability is in trouble, because they have lent money to Reliance thinking that Reliance will repay the money after so much time, commercial papers or whatsoever. But now Reliance has come back to them and said that I don't need this debt to take it back. That means their profit, this is called spread. In spread would have fallen, because there is no lending. I'm holding cash. So this is a very big area. Reliance, the Google, Facebook, money which is come in 1 lakh plus crores has a complete impact on the Treasury Department of Reliance Industries. So this is, I'm not talking as an insider, or I don't have any connection with RIL. All I'm trying to tell is that banking system has had a very serious, shocking impact of international funds coming into Reliance, and B, the Kishore Biyani deal of that 30,000 crore deal, by which asset sale have taken place. So they have but they had done a slum sale on the transaction. They have bought the assets as on 31st March, while the liabilities they were not. So you need to study that particular transaction, and it has anywhere between 25,000 crores. 25,000 crore is a huge value, and the mutual funds have fallen because capital markets have come down. So obviously the money under mutual funds again has asset under management has undergone change. So they have to keep liquid assets, and that also had an impact on the money market. So all markets are interconnected. I want you to study the link between the markets, and then I thank the organizers for giving the patient hearings. Thank you very much.
Yeah, thank you, sir. Now, what is the strategy of Mukesh Ambani? He wants to go with a negative debt policy, zero debt policy in his company.
See, Reliance has multiple P&L accounts inside. You have oil refinery, you have telecom, you have retail, you have toys. So you have multiple P&L accounts which have multiple risk and reward and multiple working capital, digital, Reliance Digital. So what happens here is the cash available in each of the P&L account have to be churned. Say, for example, the oil is always a cash generator. Now, if you see, they will refine the oil and they do that. And multiple derivative instruments also they must be working on. So they need money for retail. But retail is a very different asset class because retail will have about working capital cycle of less than two months. When I churn money on 2 months basis, and retail, it all depends on how efficiently I manage retail. So I take a goods in advance, and then I pay late, I collect from customers on cash. So the fund management of a retail segment of this Reliance is going to undergo a very different change. For example, today you and me don't go to grocery store. We order online. And when we order online, money goes upfront and then they will deliver. And so what I am trying to tell is sitting on cash is always better than not sitting on cash. And if you see, every business group in India have gone ahead and done a fundraise. You know, you have Tata Group, every group, all large groups are collecting money from the system. And that is affecting money market. That is affecting the overall liquidity. See, for example, if government of India is infusing 1 lakh crores, that entire 1 lakh crore will not go to all the 136 crore people. First, it will go to the top agencies like BHEL, like BEL, BDL. For example, defense. Defense, they have said ban the imports. That means foreign exchange market are linked to defense expenditure. So they said we will do it local procurement. That means working capital that defense sector. So you have current situation. Okay, thank you very much.
Yeah, thank you, sir. Thank you for clarifying all the questions which are raised by the participants. Sir, Principal sir, you want to say something?
No, anything else is there? I can exit.
Yeah, 1 minute.
Sekizar sir, thank you very much. Wonderful presentation, sir. So many new inputs to us. Really very attracted about the 0% interest rate and minus interest rate, how India is, world is going to affect, we have to wait and see. Really, sir, bringing out to the real capital market and money market to us and knowledging us. Thank you very much for coming and sharing your valuable thoughts. We hope so that coming future classes,
thank you, sir.
please come to the department.
Thank you, sir. You can exit. Okay, sir. Bye.
Yes.
Yeah, thank you all the participants and thank you, Principal sir. Now, we will take a break of 10 minutes. So, we will be assembling after 10 minutes. So, 5:10, the next session will commence. Thank you. This is the tea time. Take your own tea, water, whatever you want at your home. So, thank you. Bye-bye.
Naresh Reddy. Naresh Reddy. Naresh Reddy, Masood is there or not?
Yeah, good evening, Masud.
Good evening, sir.
Yeah, how are you?
Fine, sir.
You are looking so smart. Yeah. Yeah, welcome to Dr. Sheikh Masood.
Sir.
Yeah, this is a different session, no? Whatever we are discussing so far, we are going to discuss some more topics but this session is very, very different session.
Sir.
So the difference in the form of what not to do. There are so many carrots are there in the market. There are so many offers are there.
Sir.
Out of all those offers, which offers are valid or which offers are fraudulent? These are the things that we must identify as the consumer or the investor. So that's why this session is completely dedicated on the Ponzi schemes which are operating in India, not only in India, even in throughout the globe also. But in India, these type of schemes are very, very high. So anyhow, dear participants, I thank Sheikh Masood for accepting and going to speak on this particular topic. Before that, it is my pleasure to introduce Dr. Sheikh Masood, MBA, MFM, MCOM, MPhil, PhD, so and so forth. So Masood is currently working as the Professor of Finance and Economics. His PhD is on the performance of commodity derivatives market in India, analytical study. Now he has studied MBA in Kaktiya University. Yeah, he has 14 years of experience in teaching, research, and coordinator for NSE certified capital market professional. So that's why whatever we are doing today, but Masood already started long ago to educate the people or to sensitize the people on financial literacy. So that's why this program is very much connected to you. So we are very much grateful to you for your presence here. So he is a NSE certified professional, now program of National Stock Exchange of India Limited, and he also empaneled as a certified resource person of Securities Exchange Board of India, SEBI, Government of India, to conduct the financial planning, investment planning, and financial education programs for different sets of the people like young investors, executives, middle income, self-help groups, homemakers, and retired people. He has published 16 research papers in international and national journals and edited books and presented the 20 research papers in international and national conferences. He had organized 2 workshops and AICTE sponsored national seminars on role of financial services in growth of Indian economy and contemporary issues and challenges in international finance. So he was attended the faculty development program at IIT Delhi, IIT KGP, IPA Hyderabad, and Asia Pacific Institute of Management Delhi and NIT Warangal. With teaching and research interest, financial management, accounting for management, financial services, Indian capital markets and institutions, security analysis and portfolio management, financial and commodity derivatives management, cost and management accounting, managerial economics, research area. So no one subject left. Most of the subjects you are teaching.
It's an impression from.
So you have vast experience in teaching field, and not only that, in trading or sensitizing the people in the case of financial inclusion, financial financial education, like creating awareness among the different types of small and micro investors. Like, so I thank once again on my personal behalf, on behalf of the Center for Promotion of Financial Literacy and Department of Commerce, University College of Commerce and Business Management, Usmania University. I'm very much thankful to you, Masood, for this session. Thank you.
Thank you, sir.
Now,
Thank you.
this is yours.
Okay, sir, can I share my PPTs for
Yes,
presentation?
yes, you can share.
Sir, I need to get host ID, host rates for sharing.
Go with it. Okay.
Sir, hello, sir, I'm not getting host for sharing my PPT. Need to share PPT.
You are not getting?
Yes, sir.
Yeah,
Sir, now I'm getting, sir.
Yeah, it is okay. It is okay.
Okay, sir.
Yeah. Yeah, Masood. Unmute yourself.
Sir,
Yeah, you can start.
yes, sir.
Venkat?
మంచి పని
చదువు కంటే ఎక్కువైపోయింది ప్రాణం మీద ఎక్కువైపోయింది
కనపడవండి ఎట్లా ఎరిగిపోయింది
కృషి మీ తమ్ముని కంటే మనిషి చదువు కంటే మనిషి కంటే అదే ఎక్కువైపోయింది చేసిన తమ్మునికి ఇచ్చేసి మెసేజ్ చేస్తాను
Hello, sir. Please share your screen.
Sir, just a minute, sir.
Okay.
మాట్లాడి అది మాట్లాడి ఆ మెట్టలు తీసి ఎడిని పెట్టి చెప్పినట్టు ఎడిని ఆడబెట్టి మోహంకాయ అనుకొని
Sir, is my PPT is visible, sir? Hello.
Yes, sir. Yes. The PPT is visible now.
Oh, thank you, sir. Thank you, sir, for inviting me for extension lecture on financial literacy for postgraduate students. I'm very much thankful to my guru, Professor Naresh Reddy, sir. Whatever knowledge I gained from my undergraduation, I learned from this sir. He's a role model and inspiration for me to pursue my career in teaching after completion of my MBA in 2006. Okay, so with this a small little bit experience in front of professors, I would like to share my knowledge regarding Ponzi schemes, financial literacy for postgraduate students. Why? What is the need for providing financial literacy for postgraduate students? Postgraduate students are ready for the market, ready for start their career in a couple of years, and they start earnings. And under postgraduates, there are many streams are there, not only commerce or management. There are mathematics, science, engineering, and different streams of people are there. Everyone is expertising their own knowledge in their own area. Like say, for example, commerce students expertise in accounting, trade, commerce, whereas management students, apart from administration, they are finance, marketing, sales, human resource, etc. And they are zero. All commerce and management students are zero when it comes to engineering or when it comes to mathematics and science. And similarly, for mathematics and science people, they are zero when it comes to banking, when it comes to investments. So therefore, everyone has to learn some literacy to protect ourselves. There is a slogan, literate investor is a protected investor. Then what do you mean by literacy? Who is a literate? A person who can able to understand the basic knowledge about a particular subject, who is known as a literate. So literacy in a financial system. Okay. For that, we need to learn something where you have to invest, where you have not to invest, how to make our own financial planning. As part, it is a biggest ocean of financial planning and investment. To learn the total financial system, there are so many segments are there, like securities market. In securities market, stock market, then derivatives market, mutual funds, venture capital, then financial services, leasing, hire purchasing, etc. And credit rating agencies, like that. There's a vast services available in a financial system apart from banking. So within a couple of hours, we can't make you to expertise in this particular area, but we can make you to understand what the need and importance of financial literacy, how to make our own financial planning. So there are, let us see, Apna Sapna Money Money, smart game, which is known as investors. Apna Sapna Money Money, Apni Pehchan, entrepreneurs. Apna Sapna Money Money, gain from others' money, that is financial intermediaries. Let us see, in a system, investors, entrepreneurs, and financial intermediaries. There are three kinds of people available. Investors and entrepreneurs, they are having their own objectives. Apna Sapna Money Money, smart game, investors who wanted to become billionaire overnight. And Apna Sapna Money Money, entrepreneurs who people are having the passion that I wanted to dictate to somebody, I don't want to listen anybody. So that they would like to start their own business, their own venture to gain money as well as passion for the leadership. who is known as entrepreneurs. And third category people who is fulfilling the bridge gap between investors and entrepreneurs. They are channelizing the fund channelizers, who is known as financial intermediaries. Financial intermediaries, their gain from others' money. Why? Because if they are going to encourage all the investors to invest into the stock market or bank or any investment vehicle, based on that investment volume, they are expected to get some service income, like some commission or service charges, some discounts, etc. So always financial intermediaries, they are going to encourage to investors to invest their money in a, either it is a direct investment or indirect investment. Direct investment in the sense a people directly going to purchase the equity shares, equity share bonds, derivatives, currencies, etc. Directly they can invest, or indirectly, if they are not purchasing directly equity shares, they can indirectly purchase by depositing their money in the banking system, or they can purchase through mutual funds. So these are the three kinds of people. They are with their three different objectives. Now let us see a small slogan. दिखावे पे मत जाओ, अपनी अक्ल लगाओ. दिखावे पे मत जाओ, अपनी अक्ल लगाओ. Many people are given free advice. Many people are given free advice, but a person who is acting based on someone's free advice, he came to know that what will be the expected result. Listen many, act based on your own decision. Why? Because many people are ready to give free advice. Many people in India or around the world, they are having the free time to give free advices. But a person is following the free advice, he came to know that what would be the result of their advice. So that is the reason, दिखावे पे मत जाओ, listen anybody, but don't follow anyone. Follow what you want to do. That should be the attitude of the investor. Because today, due to heavy financial complex of instruments, and there is a different financial services available in the market, due to heavy competition, every stockbroking companies or financial intermediaries, they are providing their own expectation, their own forecasting in the market. So in finance, we are going to speak in depth. There is a contrary opinion theory. Don't follow the crowd. Don't follow the expert's opinion. But because everyone is expert and everyone wanted to win the game, who is going to become a fool in the market? That is the attitude of the financial services, financial intermediaries. So as an investor, when you are going to invest your money, try to understand the dynamism of the investment. Okay, let us see. And in an investment life cycle, we are comparing with the human life cycle. A human life cycle is a passing under three phases. One is a beautiful phase, education period, that all the postgraduate students are expected to complete this phase within 1 or 2 years. Then you have to start your second phase. The second phase is earnings age, that is around 38 years, second phase. And third phase is a post-retirement. Okay. In second phase, what are the activities one need to perform? Once you have started your career, first stage of your career life is marriage, childbirth, housing, children's education, children's marriage. And the entire your career age is going to complete, then third phase is going to start. So here, the biggest challenging for everyone's life, if you would like to live a peaceful life for second phase of life as well as third phase of life, you have to make a plan early stage of your second phase only. That is your earning stage. Most of the times, see for example, you are as a financial planners or advisors, you are says that invest early, then gain more over a period of time. That is your time value of money. If start early of your investment, your monetary value will be compounding based on your time passes. Once your time passes, your value of investment, if you are saving the money but you are not investing, you're not channelizing your savings for a growth or appreciation of your money, then it will not be fetch any additional return to you. So start early investment, then your money will be get compounded. Okay, say for example, in this case, I'll give one example, binomial theorem. Binomial theorem, what it says, 1 1 1 1 2 1, then 1 2 1 4 4 6 1, like it's expanding like a Pascal triangle. So your money also growing at a compounded rate when it passes the time. So what I'm trying to say that when you are starting your career age, after career age, you have to plan your second phase as well as you have to plan for your third phase, that is post-retirement. Okay, then next comes to one quotation. If you want to make money, you should know to deal with the money. How many people are accepting this particular statement? If you want to make money, you should know to deal with the money. Making money is easy, but dealing with the money is very difficult. Simple question I will pose you. How many of us remembered in last 1 week how much money you are spending for our expenses? If anybody is able to tell the chronological order of your spending with your accuracy, how much you are taken as a pocket money from your parents, then how you are going to spending on day-to-day basis, from Monday how much you are spending for what purpose, how much you are spending on Tuesday, Wednesday, Thursday, up to Saturday. If you are able to remember on a chronological order, then you are going to become a expertise in the investment market. Fortunate thing, God is given us as a forget everything. If you have 24 hours, 1 day or 2 days you are passing, you are less things you are going to remember what you did in 1 or 2 days before. Otherwise, if you remember at least 1 week outcomes, then our hard disk, our memory capacity will not be sufficient. Yeah, with a stress, you can die within 1 week if you are able to remember last 1 week events. In a similar case, earn the money, you can earn legally or illegally. But when speak to spending, how you are going to spending, if you are able to answerable to somebody, if you are going to accountable to yourself or to your parents, it's very difficult task. That is the reason I said, if you want to make money, making the money is easy. I'm not going to ask how you are going to making the money. Legal or illegal doesn't matter. But how to deal with the money, how you are going to managing the money, that is very difficult in every individual's life. And next question, you put yourself to work. There are two independent statements are here. You put yourself to work or put your money to work. Which one you are going to prefer? All of you. You put yourself to work or put your money to work. Both are independent statements. First statements, you put yourself to work. After educating yourself as a formal education of around 20 to 23 years of education, still you are going to plan to work and you are going to engage yourself as a slave to somebody, as a employee. If you put yourself to work, you are going to become a slave. Every employee is slave, including me. Why? Because you have to act on someone's rule, someone's order. Or put your money to work. Earn some money. That money has to be started earning for you. The smartness, everyone following. Put your money to work. I wanted to earn some money. That money has to be started gaining for me. So for that, either you want to become an entrepreneur, either you are going to become an investor. If you are following second statement, either you have to become an investor or either you have to become an entrepreneur. If you are going to become an entrepreneur, whatever amount of time as well as investment you are made, that will be started earning some amount of profit, then appreciation of your investment over a period of time. And second, if you are going to become an investor, purchase some amount of investment in the form of securities, either in the form of equity shares, bond, debentures, bank deposits, insurance, gold investment or real estate investment and so on. So that will be started fetching some amount of return to you. And today, whatever earnings you are going to make as a employee, that income is not sufficient to changes a drastic needs of our in our life. In this case, one thing I will tell you, simple example of inflation, purchasing power of our currency. What I was purchased last year at a given price, with the same price, can I able to purchase same quantity of goods and services today? Are you able to getting my please? An individual, what I was purchased a goods and services by spending 10,000 rupees. After 1 year with the same 10,000 rupees, can I able to get same quantity of goods and services?
No, sir.
No, sir.
No.
No.
Why?
Because if that is not sure in future, the price what you're giving today will be this like the quantity that you're getting today will be the same in the
Why?
future.
Why not it is same? What causes? What are the reasons to change?
So it might be that the product might not be demanded more or
So let us see. Either there is a due to scarcity of raw material,
okay, sir.
the scarcity of a high demand of the similar kind of product. Many people are ready to buy same product.
Yes,
Then due to that reason, the price of the product may increase and you may not able to purchase same quantity. So what is the alternative? If I wanted to purchase same quantity of goods and services after 1 year, what will be the situation? Either my 10,000 rupees has to be increased as equivalent to purchase same quantity of products or services. If I spending 10,000 rupees last year for purchase of goods and services, the same amount of quantity I need to purchase next year. To purchase next year, it is a generalizing thing that the same quantity of goods and services may not be available after 1 year. If after 1 year, if it is not available, then how can I be able to purchase? My salary income is not change. My salary is same. So what is the alternative? Say for example, I'm a salary earned person. My salary is not changing, but price of goods and services has been changing over a period of time. So what is the alternative? Two alternatives. Either price will be the constant, means whatever goods I purchased last year with 10,000 rupees, same amount of goods I have to purchase at the same 10,000 rupees after 1 year. If it is not so, if whatever percentage change in price level of goods and services, same percentage change in my salary income, then only it is possible. But there is a variation between price level changes, between your salary changes. So that causes your imbalance. You say, for example, if price level is increased in a year by 10%, last year 10,000 rupees worth of product, now it is going to become 11,000. So last year 10,000 rupees salary has to increase as equivalent to 11,000. So that there is no change, constant purchasing power. But the change between your price levels and change between your salary income or whatever source of income, it may not be changed in a same ratio. So therefore, that imbalance is cause for the inflation. Okay, there are so many reasons are there why it is going to change. What are the reasons? Just what we are discussing. There is a due to scarcity, heavy demand, or many purchases buyers available in the market, or XYZ reason. But in terms of when you are going to comparing your monetary value has to be increased at the same level. Now the question mark, how to balancing? Your price level is changing at a 10%, an example, but your salary income or your source of income is not changing at same 10%. Say for example, it is 6% change. Then how to fulfill that gap of 10% inflation rate and 4% only your income growth? There is a 6% change is there. Sorry, 6% your growth of income. So therefore, difference between inflation rate and your salary income is 10 minus 6, 4%. Then how to fulfill that? To fulfill that gap, you have to start saving your money. That savings has to be done in the form of investment, and that investment has to be gained more than your purchasing inflation rate in the economy. Then only you can able to meet our future uncertain financial expenses. For that, everyone need your proper financial planning. So that is the reason how we are going to make a balancing, how to increase our income level, how to appreciate our source of income. One of the famous billionaire in the world, Warren Buffett, he used to say that don't depend on single source of income. He said obviously right. If you depend on single source of income, our income may not be sufficient to meet our future requirement. You might have come across, see for example, due to this pandemic situation, many people is going to suffering due to lack of liquid cash in their hands. As a financial advisor, you regularly used to advise to the people, you have to maintain minimum 3 to 6 months amount of salary as a liquid cash to meet your uncertainty in future. 3 to 6 months you have to maintain liquid as a cash balance in your cash balance or bank balances. Either you might have suddenly lose your job, either you might have lose your you can get some unexpected expenses. So meet that kind of expenses or job loss or to set for another job, it takes a minimum 3 to 6 months. To survive in 3 to 6 months, every individual has to be maintained minimum liquidity. Okay, so these are the cases how the financial plan is essential. And while you are making the financial plan, while you are going to make an investment, every investment depends on 3 pillars. One is safety, second growth, third liquidity. What do you mean by safety? What do you mean by growth? What do you mean by liquidity? Safety in the sense, at least whatever amount you are deposited with any of the financial intermediary, either in the deposit with the bank, deposit with the insurance company, deposit with the real estate, or deposit with the in the stock market, or deposit in the any kind of investment, your at least your principal amount has to be safe for a period of time. And that safety in this investment, we are going to focus in next couple 1 hour how safety you have to take into consideration. Then second one is growth. My value of investment, my value of savings has to grow over a period of time. If there is no change in my value of saving over a period of time, there is no meaning of saving. If I save 100 rupees today, after 1 year, my 100 rupees is going to become a more than 100 rupees. It might be 110, 120, 130, and so on. But it should not be 100 or less than 100. If it is the same 100, there is no meaning of waiting for 1 year. I'm sacrificing in my today's hungry. If I sacrifice my today's hungry with the ordinary meals, at least I have to get a Hyderabad biryani after 1 year. After 1 year also I'm going to get same ordinary meals, then there is no meaning for waiting for 1 year. That is known as growth. Your value of money has to get appreciation. Then third one is liquidity. Means your investment you can be able to convert any time into the liquid cash, easily convertible, marketable, transferable. So while you are choosing any investment, tomorrow after 1 year or 2 years or 3 years, whenever there is a need for your money, then that deposits, that investments can convert easily into the cash without losing the value of your investment. That is known as liquidity. Movement, easily convertible, easily transferable. That is liquidity. So the investment depends on 3 major pillars. So now the first pillar, that is safety. Let us can focus how you are going to check the safety of investment. How you are going to determine whether it is a safety is there or not. Then as you are discussing, my part of discussion majorly on safety of investments, how to identify whether all the investments are safe investments or not, how to choose the investments. Then everyone having the expectation overnight want to become a billionaire, because we are human beings, we are having the high aspirations, we are not having the patience, we are not having the time. We are running in a generation of Google generation. 1 decade, 2 decades back, people are having the one color TV at home where all the family members are sitting together and enjoying the movie. But today, in a family of 6 or 7 members, every individual having their own TV. Everyone having their own mobile, 6 inches mobile with a throwaway price. Internet is available. So as generation is passing, we are having the less patience. So while you are going to make, if any profitable opportunities are there, people are blindly started investing. Any rumor is there in the market or someone is advising us, based on his advice, people are blindly started investing in that particular investments. They're going to purchase some deposits or securities or anything. But we're not having the patience whether this particular investment is a right investment or not, whether it is a having some legal formalities, registration formalities are there or not. And most of the people, as for SEBI, Security Exchange Board of India, they made a survey what the level of understanding of about the financial system by the all the Indian people. In 2011, they made one survey. In that survey, they came to know that 90%, 95% people are not having the financial awareness. Only 4 to 5% people are having the awareness about the total Indian financial system. And imagine 95%. It doesn't mean that they are not literate, they are not professional. They are professional in their respective field. A doctor is a professional in the medicine, an engineer is professional in his engineering, and a pharmacist professional in his pharmacy. But they don't know what is the financial system, how banks are running, how stock markets are running. And that survey, real life survey is conducted, and based on that survey, in SEBI, one of the preamble of the SEBI is that protection of investors' wealth. SEBI preamble, first function is a protection of investors' wealth. Now let us see how SEBI for SEBI is possible to protection of investors' wealth who are around 120 crores population. 95% people are not having the awareness about the financial system. So therefore, what they thought, let us start a mission to develop the financial literacy among the people. That financial literacy to make awareness, knowledge, provide the basic knowledge about the markets, basic knowledge about the financial system. So if you are going to provide the basic knowledge, then every individual, they are going to be learn by themselves and they can plan their own investment planning. They get the knowledge where they have to invest, and while they are going to invest, what factor they need to consideration. So these are the things where we have to learn from a awareness about the financial system. So as part of that, safety of investment, how many types of investment awareness available in the market, Indian market? Anybody please? What are the opportunities for investing in Indian financial system? How many types of instruments available? Any commerce graduate? Any MBA graduate?
Commercial papers.
Commercial papers, okay.
Treasury bills.
Treasury bills.
Certificate of deposits.
Oh, sorry.
Certificate of deposit.
Okay.
Derivatives, financial derivatives, stocks.
Okay. Any more, please? Any other participants?
Sir?
Any other? Not only you, I'm asking to somebody to speak something else.
Okay, sir. Okay, sir.
Equity shares. Just let us have a glance over. Equity shares, bonds, debentures, in long-term investments, instruments, equity shares, bonds, debentures, then short-term and medium-term, that what you are discussing, certificate of deposits, short-term deposits, recurring deposits, then insurance policies, then there are derivatives. Derivatives is not an investment product, it is a risk management product. Derivative is not a investment product, derivative is a risk management product. Insurance also not a investment, it is a risk management. Means insurance having the two options. It is having the option of investment and having the risk management, life risk management or other kind of risk management. Then bank deposits, postal deposits.
But they have a high return, no, sir.
High return. Which insurance policy is given high return to you?
Derivatives.
Derivative is a basically risk management product. It is a, see, for example, by trading in the derivatives, you can gain some arbitrage profit, some speculative profit, but objective of derivative is not for a investment. If you are a trader, if you are a risk management professional, then you can gain the investment, gain the return from the derivatives. I'll tell you, if time permits, I'll tell you then how to analyze the derivatives. Okay.
Okay.
Thank you. Then see, for example, there are so many avenues. Bank deposits are also there, real estate is there, gold investment is there, commodities are there. There are many complex investment opportunities available in the market. Now, my question is that what is your investor's objective? What do you want to earn over a period of 5 years, over a period of 10 years, over a period of 15 years or 20 years or so? Based on your investment objective, you have to choose your investment product. How much wealth you can able to accumulate after 5 years, 10 years, 20 years. Say for example, you are a postgraduate student, you are having the passion to start your own enterprise. Start how much capital you required after 5 years. In these 5 years, try to start save every month in the form of some mutual funds or in the form of equity, in the form of any kind of deposits based on your target of capital. Then you can choose your investment. Then I'll ask you, in this case of insurance, simple logic. If my father is going to on tour for 2 days, how much money he can able to give to my mom to manage home? For 2 days he will give 500 rupees. If he goes for 1 week, he will give 1000 rupees. If he go for 6 months, he will provide 20,000. If he go for 1 year, he will give 50,000. If he goes permanently, how much he has to be paid to survive my family? That is the simple logic of insurance. It is a combination. It is a combination of investments, a pooling of savings from all the group of people, and they are investing to protect someone's life risk. But most of the people, insurance agents, they are misleading the noble objective of insurance. A fellow is selling the insurance policy, he don't know how to read the total proposal document. Just he simply said that, sir, you have to sign in this box, you have to sign in this box, in this page, in this box. And one more thing I will going to ask, most of the people are commerce or non-commerce graduates are there. Everyone is having a savings account in a bank. How many of us is read total application form while you are opening a savings bank account? There are 6 or 8 pages bank application is given file, you open a savings account in the bank. How many of us is read total application form? That is the biggest question mark for everyone. That explains our passion to learn what are the contents of the financial system. Banker just says that sign in this box, but he will return total terms and conditions as per Banking Act. What are the relation between a saving holder and bank? What are the custodial relationship as far Indian Banking Act is concerned? That will be explained everything in the application form. But most of us, I'm telling you about, even including me, when I was open as a commerce graduate or management graduate, when I was open my bank savings account, I could not able to read my total application form. Then imagine a person who is non-commerce graduate, can you expect that person is read totally? Okay, 1 or 2% in out of 1 or 2% percentage people might be there to read the total application form. I'm not denying, but more than 90% people are not read the application form. where it explains terms and conditions of the relationship between the deposit holder or savings bank holder and in between bank. Okay, let us see what are the investments. So my question is that somebody in coming classes, somebody will be explained to you what are the financial planning, what are the essentials, what is the time value of money, what are the impact of inflation, then how to choose the investments and what are the objectives, everything, and what are the types of mutual funds, and there are so many schemes. Some other faculty might be explained. And in this case, let us see, my objective of a presentation is Ponzi schemes. What do you mean by Ponzi scheme? What do you mean by, are you heard about Ponzi? Ponzi.
No, sir.
Ponzi is a person name, Robert Ponzi. Modern origin of Ponzi schemes. Charles Ponzi, an Italian American who launched the investment scheme in a Boston, US in 1919, promising to double investors' money in first in 90 days, then in 45 days. It means that if investor deposit $100, he get $200 within 90 days, means in 3 months. And subsequently, within the 1.5 month, he is going to get double the income. Now, can you able to find any kind of opportunities where in a regulatory financial system, either in a Indian banks or US banks or stock market or anywhere in the world, where you are going to get double your income, double your deposit money within the 90 days? So he didn't have any business model, simply is collecting the money by showing some attractive investment returns. Just you can deposit $100, you will be getting $200 in 90 days, in 3 months. Then everyone is very much happy. Why? Because within 3 months my money is going to get doubled. But nobody is asking how you are going to given double the income within 3 months. What kind of miracle you can able to make with my $100? क्या जादू कर सकते हैं? We have to make my $100 to $200 within 90 days. So he's collecting money from the people and with a attractive returns within 3 months. Most of the people started depositing. He's collecting the deposits from the public and he's enjoying the benefit and is given the return first to few people. Then after that, as number of people is depositing his deposits are more, he could not able to give them back. Then rest of the money is going to be enjoying, which is luxury life. So he's by name of the person, Charles Ponzi. That scheme is known as Ponzi schemes in the world. So what are the concept of Ponzi scheme? Ponzi scheme is a fraudulent investment operation that promises high return at little risk to the investors. Means with a small investment, with a high return, whatever amount you are deposited within 3 months, 6 months, within 1 year or over the night, within 15 days, you're going to get double your income. And that kind of schemes are launching by the people. Then they are going to collecting the money from the public and they are given return and early stage of the people, first stage of investors, then based on collecting from the subsequent investors. And how they are going to make advertisement, perpetuation of return, that Ponzi schemes advertise and pays a required ever increasing flow of money from the investor to keep scheme is going on. Let us see with the help of small example how it will be possible. Here so what are the cases, what are the Ponzi scheme characteristics? Scheme will run until money is going to be let us see, I'll explain the concept similarly, very simple. Say for example, a person launcher of the scheme, he says that if you are depositing $100 or 100 rupees, I'll pay you in 1 month, in 3 months, I will double your money. So in a city or in a region, he is collecting at a first phase some from 100 members. From 100 members is collecting, and within 3 months he will be returned back double the income for 100 people. And by seeing that trust, he is going to be creating the trust among the people. Okay, this scheme is going to given the return within 3 months. Then after subsequent second stage, this 100 members is going to bring the few family members or few friends and pool to collecting the deposits. Second phase, he collecting from the 1,000 members, and he's collecting from the 1,000 members is given return to first batch at double the income. Then next stage people is collecting the money and given to the second batch investors, and this pool is started increasing. Then once pool is stopped, say for example this is continuous up to certain period only, 3 months, 6 months, 12 months or 1 year or 2 years. Then as long as the pooling of the savings from the different investors is continuing, then for old investor is paying from the new investors money. The new investor is going to become a second stage, third stage. Then again new investors will be subsequently it's coming, and they are depositing the money with the intention that okay, this fellow is given double the income within the 3 months. So all the people have started depositing, is pooling the money in crores of rupees. Then once one stage will come where he's collecting a crores of rupees, then he started ran away. Why? Because he didn't have any business model. With the same money circulation, he is collecting the money and he returned the money. He's not using that money for any productivity purpose. He's not started any business. Why? Because no business will be given the return, 100% return within the 3 months or 6 months or 1 year. Can you able to show me any business which is given your business investment, your capital is going to double within 1 year? Anybody please? You might have having experiences with your neighbors or your friends or family members. Can you show me any business in India or abroad where you can double your capital within 1 year by doing a legal business? Is it possible?
No, sir.
Simple logic. No business will be double within 1 year. So how this fellow will be returned within 3 months or 6 months, double your income? Simply, he is collecting the money from one stage people, then from second stage people, again subsequent coming investors, new investors is pulling the investment from a new investor and it's paying return, double return for first stage. Why? Because first stage few people are there. First, say for in this example, first 100, then second stage 1,000 people. So from 1,000 people is collecting the money, and for 100 people, double the income means 200 worth of people is given to first stage people. Then third stage is collecting from the 2,000 people. So 2,000 people deposit what he is collected, he is given double the return for the second stage, whom he is collecting from the 1,000 people. Then fourth stage, fifth stage. Now let us see, in a colony of 10,000 people, he started launching the scheme. In a 10,000 people colony, all the people are deposited that money. Then last stage people, from where he's going to provide that double income return. Why? Because he's not doing subsequent new investment, he could not able to collect. So that is the case. As long as he's mobilizing the deposits from a coming new investor, these schemes will be continuous. After that, the one point of time, the large pool will be completed. Then last stage people started demanding the money he could not able to provide. At that time, he's pooling a large corpus fund, he's ran away. Live example, I will tell you. One of my colleague from a previous college, his wife, one fellow is coming in a colony. is a live case. It is happened around 8 years back in Khazipet, Warangal district. A person is coming with a new scheme, and he says that within 4 weeks I will double your money. She deposited first 5,000 rupees. She also faculty, and my colleague is a computer science faculty. She deposited 5,000. In 4 weeks, he will double the 10,000 rupees. He returned to her. In a colony, 3 people are collected. Then, with that expectation, all the people have started depositing. And what is given, see, for example, second time, third time, when he's going to return the double the money, he says that, okay, I will reinvest your money. I will not give 5 to 10,000 rupees. This 10,000 rupees again, I will reinvest. I will consider as a reinvestment. Then I will pay you 20,000 after 1 month. Then after 1 month, again he says that this 20,000 I am considered as a reinvestment, and next after 4 weeks I will pay 40,000 to you. Then with that passion, within 6 months, he started a scheme of 4 weeks double. Within 6 months, he collected 4 crore rupees. 4 crore rupees in a colony within 6 months. Then he closed the shutter and switched off the mobile, and he ran away. For whom you are going to ask? And my friend's wife, she sold her ornaments. She was deposited 5 lakh rupees. He ran away, and no one could able to find out him. And that case at the time of Rajshekar Reddy was a chief minister. The case went to the CM. Then he's asking, investigation department is asking, where he is from, what is the address proof? Nobody is having his address proof. His phone is switched off. He closed the shutter, turned the board. Then whom you are going to ask? That kind of schemes is known as Ponzi schemes. Okay. Then second type of schemes are there in this Ponzi. So types of schemes. One is pyramid schemes. Pyramid schemes is nothing but the multi-level. One have to be joined, then he has to be deposit from 5,000 rupees, then he has to be bring 2 more persons, then that 2 more persons will be deposit 5,000 rupees. So first person will be getting 2,500 rupees. Then the 2 persons again they have to bring 2 more persons. Then this chain has to be increased over a period of time. And that is known as pyramid scheme, like Pascal binomial theorem. Then they are collecting as much as possible. This pyramid is started increasing. The first stage, second stage people will getting the income. Then the people who are reaching to the last stage, they could not able to find new 2 persons to invest in that particular scheme. Then entire scheme is going to get collapsed. That is second type of Ponzi schemes is known as pyramid schemes. Okay, so these are the cases. First case, Ponzi scheme. Every investor depositing their own money with a double the income. There is no chain. Just every individual started depositing the money. Whereas pyramid scheme, every person has to bring 2 or 3 persons to make them to join the scheme. Then that is a scalar triangular chain will be expanding. That scheme, most of the cases in India, I have also once upon a time as a victim for not this deposit scheme, but that is multi-level marketing in India. I have to deposit 5,000 rupees, I have to purchase 2,000 worth of goods, then remaining I have to make them to join 2 members. Then the 2 members is going to join another 2 members. This kind of schemes will be fraudulent schemes. That is known as Ponzi schemes. Okay. Then next, if you are going to see pyramid schemes, there is in this particular PPT, first person who is a introducer, or launching of the scheme, then he will be given chain for next 2 persons, then 2 persons is going to give a chain for next 2 persons, and this scheme will be expanding. Then if you see a symbol of pyramid scheme, number of participants, then chart shows how pyramid schemes going to become impossible to sustain, and levels. First level 6 members, second level 36, third level 216, fourth level 1296. Means, see, one level is started increasing, the number of persons is started increasing. More than world population, it level is goes to up to 12 or 13%. The total population of the world is not 13 level is more number is required as a participant for the scheme, where the world population is less than that. Okay, this is the concept of Ponzi schemes. And second is multi-level marketing. Multi-level marketing is like this in this given. One first person introducer is introducing 5 persons, then each person 4 members, and it is going to become a more than a binomial theorem. Dvipada Siddhantam. If Telugu students are there, Dvipada Siddhantam, where I studied at a schooling level, 10th or 9th or 10th standard. That is known as binomial theorem. Okay, and this multi-level marketing is more than binomial theorem. Okay, few case studies in India. In I was given here in 2000 April, Deepak Jangra and Deepak Malhotra was investigated and arrested in Delhi cybercrime for operating a series of Bitcoin multi-level marketing schemes in 2016. And one more, Bitcoin market also big scam. There is no registered regulatory authority. They are not. Bitcoin is not comes under regulatory system of RBI. Try to be aware of that. And second, Noida Ponzi scheme, a special investigation team probing in a alleged Ponzi schemes run by Anubhav Mittal, managing director of Ablaze Info Solution, concentrate on their effort to suspicious transaction by the nearly 200 gold and diamond dealers. And here in gold and jewelries, they have started the monthly deposit schemes. Monthly deposit schemes, they are going to providing some kind of discount on gold purchases or some kind of double their income within 2 years or 3 years. But try to remember that no schemes in India registered as far SEBI is concerned or RBI is concerned, which is providing double the income within 1, 2, 3 years. Please be make aware. And one more scheme, real estate schemes also coming. Say for example, you can deposit for 5 years or 3 years, then we are going to provide your double the income and our equivalent amount of flat in a sophisticated area. Okay, that schemes comes under real estate also. And second case, which is one of the case here in September 5, 2012, the Economic Offence Wing of Tamil Nadu police arrested MS Guru, maintain a contact emu bird farming scheme is launching, and for a is collecting from 12,000 investors, and file the cases amount over $28 million. Imagine, he collected from 12,000 investors $28 million. Is showing that he is running the farm, and that farm is given the yield high profit within a short period of time. Okay, this is one major case. And one more, Sarda scam. Sarda also one of the biggest scheme for Ponzi scheme in India. They are showing that they are running the scheme and they are creating 200 private companies under one Sharda Group, but there is no existence of a single private company. And they are showing we are running 200 private companies under group of Sarada, and they are collecting the money from people in the form of cheat fund, as a concept of cheat fund. And he is a person, that is Sharda Group chairman. He is from West Bengal. Then he is collecting amount from the Assam, Orissa, Tripura as well as. Okay. Then next scheme, Bitcoin Guru, arrested for 2,000 crores Ponzi scheme. A first person in India who brought the Bitcoin in 2013 2016 is known as Amit Bharadwaj and his friends and his brother, and is get arrested in Mumbai scamming worth of 2000 crore rupees. Then US major Ponzi schemes are there. In one of the recent major scheme in the US Ponzi scheme in December 2018, he is more than $1 billion. Sorry, total estimated loss of his scheme is $17.3 billion, and he managed the funds of $65 billion, and the after fraud is identified, his total estimated loss for the investor is $17.3 billion. Like this, there are so many US schemes are there. There are major schemes I have given in this particular PPT. Then now the question comes, sir, how to identify? See, in this Ponzi scheme scams value in US dollars over a period of time from 2008 to 2019, how many identified and how many cases are pending, how many cases are settled so far. In 2018, that is Bernard Madoff and Thomas Peters. These are the two big scams in US history, where $65 billion money is collected by this particular Ponzi schemes. And after that, the rules, US government regulatory rules are stringent. Still, that will be declining in 2019. Again, it is a sharp increase. Then, new age of cyber scams. It is not a Ponzi scams, but cyber scam. Just like for knowledge purpose, I am sharing here. Lottery emails from the foreign countries, fake emails from the financial regulators, employment emails using the name of reputed companies, credit card limit updation calls from bank officials, hacking internet banking passwords, and prize winning pop-ups working on internet. These are the type of new scams is coming into the market. Be aware of that. Then how to protect ourselves? What are the mechanism? Be skeptical. So whenever any kind of scheme is launching, try to be very cautious and verify scheme related documents. Then understand the investment pattern. Try to ask what is your business model, where you are going to invest your money, how much amount you have collected, how much time period it takes to double my money, or what is the business model, where how to generate the return, double the return by doing the business. What is your business model? Try to ask them. Then report. If you are finding any suspicious scheme, it is better to report to RBI, or in India you are having a fraudulent investment authorities there, which is working under Ministry of Corporate Affairs. You can report to them. Then no information on downsiders. See, for example, what is your perspective? What is your vision of the business? What kind of product or service you are going to supposed to be manufacture, or what kind of product you are going to trade. Try to ask them. And what is the track record of the promoters? Who are the founders of the business? Say, for example, if it is a single owner, he need not to collect the money from other people. He is going to become a sole proprietor. But when it comes to company, there are many founder members are there. Minimum for registration of the company, as for Registration Act, at least there are two types of registrations are there making the amendment. One is a one single company, a single person company, and there are minimum 7 members in case of public limited, in case of 2 members in a case of 3 members in case of private limited. So first you can identify what are the profiles of the founder members. Then where you can able to came to know that if you are going to ask that kind of question. And one more you can ask, where is your registration? Today, what is the registration number? Either your registration with the RBI, or registration under SEBI, or registration under Ministry of Corporate Affairs, or registration under IRDA, or registration under Pension Regulatory Authority, or any kind of some Indian official regulatory authority. You can ask simply registration and license number. Then ratings assignments. Say, for example, in India for financial intermediaries, they are going to assigning CARE, ICRA, Fitch. These are the rating agencies. They are going to give the rating for the IPOs, initial public offers while they are issuing equity shares, and bonds or debentures while that company is going to do issuing. So you can ask what is the credit rating of your bond, credit rating of your deposit scheme. Then what are the terms and conditions? If you are going to ask, these are the questions to any scheme holder who is providing the launching the scheme, that you are going to double your money within the short period of time, either it is a 6 months. Even I can say that it is minimum, if you go and deposit in a postal deposit or banks for double your income, it is based on your interest rate. It is around 7 to 9 years it takes to double your money. 7 to 9 years. No bank deposit, no postal deposit will double the money less than 7 years to 9 years. Try to remember that this is the rule of thumb. Okay. Then in India, some parliamentary committee, the Indian Parliament is passing to curbing the Ponzi schemes in 2019. 1978, one amendment was bill was there, and they are made a amendment in 2019. They are passing to curb the Ponzi scheme to protect the poor investors in India is concerned. Okay, thank you. And these are the part of some cases, concept of the Ponzi schemes. Okay, any questions from audience?
Dear participants, if any question is there, please post on chat box.
Yeah, any questions from participants? Yeah, Masood?
Sir.
Yeah, somebody asking about what is network marketing?
Network marketing is a connecting from one person to another person, whereas in India, they are providing one registration to one person, then they has to be introduced to some other person. And the concept of networking, they are removing the supply chain direct from manufacturing to it reaches to the consumer. And whereas traditional system of supply business where distributor, wholesaler, retailer, and consumer. So network marketing, they says that whatever supply chain commissions what you are providing in a supply chain, that commission will be paying to the directly to the consumer from a manufacturer. So based on through networking, but because we are having the technology, so directly is connecting. That is the concept of where today e-commerce companies are doing same thing. They are taking the order from the consumers, they are directly transferring to the manufacturers. That is networking. And many companies are there in networking. One company says that Amway India is based on concept of networking as well as multi-level marketing.
Yeah, any more questions? This is only one question they post in YouTube.
Okay, sir.
Any other participant? You want to clarify your doubts or raising some questions?
Sir, one more question from YouTube, sir.
Yeah, tell me.
Sir, this network marketing is worthy or not?
Yeah, network market is worthy or not? They are asking.
Worthy or not, sir?
Sorry?
Network marketing is worthy or not?
Sir, that network company is a registered company as per Indian Companies Registration Act, and whether they are really manufacturing the goods or trading the goods, then you can check out the registration of the company. Then you can purchase. Why? Because due to network marketing, the concept is that they are removing the supply chain directly from manufacturing to consumers. A best example you can see virtual not only networking. Today Walmart in India is operating. Walmart concept of the business is that they are selling not to the retail investor, they are selling to the wholesalers. As an individual consumers, you and me, you can't go to the Walmart. They are concentrated on wholesalers. In a similar case, in networking, manufacturing to the consumers. So there is no scope of any fraud. Why? Because you are paying the money, whether it is a genuine product or not. Before you are going to launching the purchasing order, you can check out. Then you can place the order. It is there is no relation with the Ponzi schemes, or there is no relation with the fraud they are going to make. Why? Because there is no deposit schemes.
Yeah, somebody is asking, is there any difference between Ponzi scheme and pyramid scheme?
Ponzi scheme where they are collecting the money from individual investors, then they are repaying double the income from subsequent investors. Whereas pyramid schemes, it is a chain. One person has to be deposit and he has to bring 2 more persons in his down the line. Then that 2 persons again they have to bring 2 more persons. So it is comes under as a triangle shape. Network it is continuing. As stages of the deposit accepting the deposit holders is increasing, then chain will be increasing. That is pyramid type.
Yeah, we have Peerless company long ago.
Sir?
Peerless company.
Peerless company, sir. Yes, sir.
We have Peerless company long ago.
Yes,
so
sir.
what they will do, you must bring 2 members, they will give some subsidy or they can give some bonus like.
Yeah, yes, sir. Even some chit fund companies in Hyderabad, which is based from the Kerala, they are running same concept of a multi-level and pyramid kind of schemes. But they are running in the name of chit fund.
Yeah. So awareness is playing an important role. Which is right, which is wrong. Investor must justify, or investor must judge about that particular scheme, or maybe an instrument, whatever it is. So the investor must be aware of many things. So without knowing the rules and regulations of the market, it is very difficult to enter into the market. Am I correct?
Yes, sir, definitely, sir.
Games of the rules are going to play an important role.
Yes, sir.
Maybe any market.
Any market, sir. First, they have to be checked whether it is a registered one or not. First thing.
Yeah. That's why rules of the game is important.
Yes. And money will not be generated the money itself. Money has to be converted into the form of productivity asset. Then only it can able to generate some amount of profit.
Right. So most of the people, what they are doing, simply they are multiplying without manufacturing anything.
Yes, sir. That all the kind of schemes comes under Ponzi schemes.
Yeah, easy money.
Yes, sir.
Yeah, I request Professor Channappa sir, you want to interact with the audience? Professor Channappa sir.
Yes, sir, is context.
Masood Saab.
Good evening, sir.
A wonderful presentation.
Thank you, sir. Thank you, sir.
So far, I have been listening.
Sir.
You are one of the best.
Thank you, sir.
You have given a lot of knowledge to our audience.
Sir.
Definitely, they don't invest without knowing anything.
Yeah, thank you, sir.
I am a principal for this college.
Yes, sir. I know, sir. I was worked with Aristotle. I met you, sir, over there.
Yeah, then wonderful. I congratulate on behalf of the college.
Thank you, sir.
All the best, and any time is permits again, you can come back to this platform.
Okay. Thank you, sir. Thank you,
Thank
sir.
you. Masood sir,
Thank you.
Yeah, thank you, Masood.
Thank you, sir.
So I'm very much proud today.
Thank
Why
you, sir.
I'm very much proud about you?
Thank you, sir.
Why I'm very much proud about you?
Thank you, sir. Sir, any other product from you only.
Yeah, that's why. So my product, it is my product. So
Sir,
I'm very much thankful to you for your excellent presentation and a lot of insights that you have presented here within very short notice.
sir.
So anyhow, you are into the market and you are educating the many people in the market. That's why you know in and out of the Ponzi schemes like that. I thought so. This fellow, that Masood, is very much suitable to this particular topic. Like so, thank you for
Thank you.
your
Thank
presence
you.
with our audience in this evening. So, thank you, Masood. We will see
Thank
you
you, sir.
once again.
Thank
Thank
you,
you.
sir.
Thank you.
Thank you.
Sir, please close your screen share, sir.
Yeah, good evening, sir. Sir, welcome, sir. May I audible? Hello? Hello?
Naresh Reddy, audible?
Yeah. Sir, Mundra, sir.
Yeah.
Venkatesh?
It is audible.
Okay, sir. Hello? Mundra, sir.
Yes, please go ahead.
Okay, sir.
So, should we start?
Yeah, before going to start your session, I want to introduce you, sir, to our audience. Please give me 1 or 2 minutes, not more than that. I know. Yeah, good evening, sir. Welcome back to Usman University. So we met in the year 2019, March, in a 2-day national seminar on the fintech adoption in the Indian BFSI sector, opportunities and challenges. Even today, most of our teachers and students, research scholars, they remember your address in the seminar, and not only that, you have already participated in panel discussion in that seminar. Now, we are very much grateful to you, sir, once again, in this online 7-day national level workshop on the financial literacy to postgraduate students. So, I want to take 1 or 2 minutes to introduce you, sir. Ronak Mundra, MS in Financial Engineering, USA, holds a Financial Risk Manager certification from GARB, USA. Currently, candidate for Chartered Financial Analyst, CFA Level 3, USA. His domain expertise are portfolio and risk management, quantitative investment strategy, statistical arbitrage, and financial modeling. Ronak currently heads quant research for Option Financial Research Private Limited. He has over 10 years of experience in algorithmic trading in international and domestic markets across all financial products, equity, commodity, and forex. So thank you, sir, for this short introduction. I welcome once again. And I am very much grateful to you, sir, on behalf of myself and on behalf of the Department of Commerce. Thank you, sir. Thank you. And you have to start your session.
Yeah. Thank you very much, sir, Naresh sir, and also giving me this opportunity to present a very small topic specifically to the students who are just starting out with their career. So I'll try to make it the topic to be more lucid and simple to understand. Plus, I'll try to keep it more pragmatic so that we can also understand how the entire forex market works. So there will be two parts. Since we have enough time in hand, we will have some slides which will be talking about a brief overview about foreign exchange market, as to who are the parties involved and how things work. But on the sideline, so even when I'm running my slides on the sideline, I'll also show you things, how the exchange looks like, or how the other fields, wherever we are trying to understand, they all would also look like in the practical side. For example, if you are trying to do on forex exchange, I'll try to cover two important things. First is on NSE, that is our Indian markets, which has the currency derivative segment. So I'll cover that part as well. So for the domestic forex, how things work, I'll be covering that part. Then also going global. So this is the Chicago Mercantile Exchange, where the US market, or the most liquid exchange for currency, I'll be covering that as well. So I'll try to give you both overview, the domestic market and the global market, and what are the important things which we need to note when we are trying to understand this forex exchange. So let me start giving you a little bit of brief of the foreign exchange, and then we can come across every slide which we are trying to run and understand later on, considering our domestic market, that is National Stock Exchange, and the global market, which is CME, Chicago Mercantile Exchange. So let us start. So let me just give you a small overview. So everybody knows about forex, or the foreign exchange which is there. So everybody, as an individual or a retail participant, we are involved into forex only when we try to either do tourism, or we go out. If you want to travel to US or Singapore or Dubai, or even outside India, you need to have a new currency. So we can say every country is having its own currency, and we need to be having that currency if we are trying to go for tourism purpose. That's where the retail participants are making use of foreign exchange. Now let's try to go a little broad from individual person, from individual to companies or corporates. So when we try to see different corporates, so for example, let's say Asian Paint. Now Asian Paint, everybody knows about Asian Paint. They make paints. Now paint requires oil, and oil is their raw material. So they have to import oil, and then they have to make paints. Now when they are trying to import oil, so they might want to import oil from outside India. For example, let's say they import oil from Dubai or UAE. Once they import oil, they have to pay in a different currency, right? So that means Asian Paint is an importer. It is trying to import something and trying to pay some foreign exchange or foreign currency as the payout. So another company, which is Infosys or TCS, these are IT companies. They are also providing some services to US market or Europe markets or outside India. They get their payments in dollar terms. So they do some service, and then they have some contracts by which they get payments in dollar terms. Now try to understand both the companies. One is Asian Paint, another is Infosys. Asian Paint is an importer, means he will pay dollars, and Infosys will get dollars. So one is like an importer, other is like an exporter. So India has all these kind of companies. Some companies are kind of importer. They try to import things. So some people or raw materials are also imported from China. So let's say chemicals, or even the pharma industry or textile industry, all the industries, whenever they require any material from China or other countries, they try to import stuff. So whenever they are importing, the dollar is going out of the country. If you are exporting, dollar is coming into the country. So if I try to see from company point of view, some companies are importer and some companies are exporter. So let me bring you a simple chart. So let's say if I am an importer or an exporter in Indian markets. So if I am an exporter or importer in Indian markets, then it is very clear. If I have to do payments in payment to a US party, I will require USD INR. So I need to convert my INR into USD and I have to pay him in USD exchange, USD currency. If I am importing anything from Europe, I have to pay in Euro currency. If I am taking any kind of payments or any kind of goods from Britain or Great British pound has to be used. So I'm trying to understand over here, if I am an importer, I have to convert INR into that corresponding currency. So here, if I am trying to import anything from Japan or from Britain or from Europe or from US, I need to pay them. And when I have to pay them, I have to convert my INR to their corresponding currency. So here we can say that I have to convert, I have to give 73 rupees to get $1. I have to pay 86 rupees to get €1. I have to pay 96 rupees to get £1. I need to pay 100 or 68 or 69 or 70 yen for rupees to get corresponding 100 yen. So idea over here is, if you are an importer, you have to give this much amount in rupees to get 1 unit of dollar, pound or euro, or 100 unit of yen. But if you are an exporter, so I'm not an importer, I'm an exporter, I will get dollars. So if I get dollar, I will tell, please convert my dollar into INR. So every dollar I will keep getting 73 rupees, or for every euro I'll get 86 and so on. So here we can say that the entire market, apart from retail individuals, there are the corporates or institutions which make use as an importer or exporter of the foreign exchange. Now the third person who is also involved in the forex market is the country themselves. Now all these corporates are nothing but part of country. So India will have dollars coming in and India will have dollars going out. And that is called as the imbalance. Do you have large forex reserves or less forex reserve? That forex reserve is nothing but the difference between what you get and what you pay. So if I am getting $100 and I am paying $80, I have an excess of $20 reserve. So import, export, and then apart from companies, even the country comes into place. So the agenda over here, when you're trying to look at forex exchange market, we need to understand who are the participants and how this entire thing works. So first agenda is, there are different participants. Retail participants are there, then you have the corporates, they are there, and then you have the country. Now even as India is an importer of gold, importer of oil, so they have to pay in dollar terms. So country can also import, export, like China is the biggest exporter, so they try to export things. So that's where the foreign exchange market comes into place. So let's first understand what is the forex market. So forex, as the word says, it is foreign exchange. The foreign exchange is nothing but the process of changing one currency into another currency for variety of reasons. As I told you, maybe for commerce, where we are trying to exchange goods, or for trading purpose, or for tourism. But main agenda is, you need to give INR and you get dollar, or if you have dollar, you can convert it into INR. So that's the main purpose of foreign exchange. So why do you need a foreign exchange? As I said, every country has their own unit of exchange, currency, where if you want to dialect or you want to transact with one country to other country, you need to involve yourself with foreign exchange. So crossing the border, that means foreign exchange gets involved. Now, other thing to understand about foreign exchange, it is the marketplace where various national currencies are traded. So what is actually a foreign exchange? Exchange means like NSE, like CME, as I said, of global markets, Chicago Mercantile Exchange, and NSE is for Indian markets. So foreign exchange is a place where you're trying to bring in various national currencies together, right? So as I showed you right now, the dollar, the GBP, the euro, the yen, all are traded on NSE. So that's your national stock exchange, on which you have a segment called as currency derivatives and currency segment, which is called as foreign exchange. So forex market, this is the most unique point to understand. Forex market is the largest. It's the largest and the liquid market in the world. Now there are three kind of markets. One market is the forex market. Second is the commodity market, and third is the equity market. Now out of all three markets, so forex, commodity, and equity, out of all three markets, the forex market has the largest, is not only largest but most liquid. Liquid means large number of participants are present in the forex market. So one thing which is very important to understand, forex market is the most liquid market, or I can say in layman language, forex market has the largest participation. Now why does forex market only has largest participation? Try to understand, if there is US companies or US government, they don't want to come and trade Indian stock market. They don't want to go and buy Infosys, Asian Paint, or any equity market of India. So there are different segments like FIIs. They would like to deploy their money in India for investment purpose, but that is very, very small. But major chunk, if you actually see each equity market, they are more confined to their geographical purview. So equity markets, every country has their own domestic equity markets, and one country does not try to trade into another country for equity purpose. Now, some people do want to go out and buy Tesla or Facebook or Netflix, all these Google, Amazon stocks of US country, right? So on US, they are listed, people want to go and buy. So that is a small fraction of people would like to do that. So let us understand how many people are holding these US stocks in their portfolio for Indian markets. So Indian markets, Indian retailers, investors, they are not holding the US equity. That is why the equity market has lowest participation. So second comes commodity. Now why commodity is more liquid or more participations are there in commodity compared to equity? Because when you take commodity, for example, gold, for example, oil, for example, copper, aluminum, zinc, nickel. So even if there is base metal or precious metal, these commodities have global standards. So the pricing of gold is never been set in India. The price of gold is being set by US market, and we just convert that dollar into INR to get the INR pricing. So if time permit, I'll try to show you how the conversion is done and how we can see that the gold prices are just the replica of dollar price of US being shown over here in INR. So that is what you need to first understand. The forex market is the largest and the most liquid. So this has a lot of meaning. Largest and the most liquid. Liquid means more participation taking place into the forex market. Now, the most interesting part of this is there is no centralized location. That means, for example, if you want to go and buy Infosys, TCS, Asian Paint, Pidilite, any stocks that you want to buy, where do you go? You go to an exchange. where they are listed and you will go and buy. But in terms of currency, there is no centralized location. Okay, that is the most interesting part. No centralized location. Rather than that, the forex market is just an electronic network of banks, brokers, institution, and individual traders. So the most important thing over here is to understand that it is just a kind of consortium where all are linked to through electronic networks. So one bank is connected to other bank, or one broker, institutions, everyone are connected. They are trying to quote their prices. So that is how the entire forex market gets built up. So there is not a local place somewhere where you can go and you can see, okay, these are listed over here. So there is no listing proposition in forex market. So equity, they have IPO, primary market, secondary market, and all that stuff. It is not there in forex market. So three important points about forex market. The first point, which is very, very important, the foreign exchange is nothing but a national currency. Second point, it is the largest and liquid market. And third, there is no centralized location. So these 3 points are very important about forex market. Now, who trades forex? As I already told you, some of the participants, central banks. So those who are there dealing into central banks, where they try to give, so import and export, everyone does it through their banking system. And central banks are there of every country also. For example, RBI is there of India, you have Fed of US. So they also get involved in forex. Like RBI, they have reserves of, so when the dollar reserves are there with RBI, they also intervene in the forex market to have a control on the USD INR or any kind of forex. So there is a question that means it's very high risk to investment. No, first thing to understand over here is if you are trying to look at forex, it cannot be part of your investment. Investments are done in assets. Either you take gold, either you take equity, but you cannot have forex as an investment asset class. So currency is not an asset class where we will invest. Ideally, if you have any asset class which is, so for example, I'm holding Amazon stock. Now Amazon stock, if I'm holding, the price of Amazon goes down in dollar terms. Okay, and if the currency of USD INR, which also fluctuates, then you will have some risk which will be there whenever you are trying to look for holding asset in another currency. Then you have risk of forex. Otherwise, if you just consider forex, forex is not considered as an investment. For example, should I allocate some money to dollar? Should I buy dollar and keep it in my portfolio? We don't have forex as an asset class. So there are many people who are involved in the forex. One are the central banks, RBI, Fed, all these banks, bigger institution, monetary institutions which are there. Commercial companies, as I told you about, Asian Paint, Infosys, TCS, these are there. Foreign exchange fixing, those who try to fix the pricing. Investment management firms, as I said, those who are interested in US to invest in India, they come under investment management firms. Non-bank foreign exchange companies, those companies which are not under the banking license purview, they are also part of the foreign exchange. Money transfer companies, now we have already seen there are a lot of companies which transfer money from US to India, or from outside India to outside India to inside India, and there are also who transfer from India to outside. So money transfer companies are also there. So in India, they have to be under the purview of RBI. You need to have a separate license if you're doing any kind of money transfer. So like there are many MoneyGram, which is there, of Muthoot Finance. So those are their different money transfer companies. Retail foreign exchange, as I already said, if you are trying to go for a tourist spot, you're trying to go out from one place to other to visit something, international travel, you need foreign exchange. So somewhere or the other, from retail to corporates, from corporates to country or central banks, all are involved in forex. Okay, and that's why it makes it one of the biggest marketplace in terms of participation plus the liquidity. So both of them are very, very important. Now, advantages of forex trading. Now, compared to all other trading, so equity market is also there, commodity is also there, forex is also there. So everybody likes to trade forex rather than equity and commodity because of various 5 features that are listed over here. First and the foremost, which we have already discussed, highest liquidity, right? So liquidity is very, very high in forex, and that's why people want to trade forex. Second, there is no barrier to entry. You, me, anyone, right from the global, right from the banks to corporates to retail individual can also go and open an account and start your forex trading. So forex trading, like equity trading, there is no barrier to entry. Third, which is very, very important, better risk management. Better risk management in the sense, if you have any exposure to outside country, so if I'm holding any stocks of outside country or I'm doing business with outside country, then you can hedge your investments or your exports, all of that which has some forex link. You can invest and you can use this as a risk management format. So for that also people use it a lot. You can also trade anytime you want. Now, what do you mean by trade anytime you want? Now, the good part about forex is they are open 24 hours round the clock, right? So I'll show you when I'll show the CME market exchange. The global markets, all the currencies are traded 24 hours round the clock. So there are only 2 markets. One is the forex and other is the commodity. They both are open 24 hours round the clock. There is just a break between 1.5 hour or 1 hour. There is a break in amongst all the 24 hours which are there, but majorly they are open 24 hours round the clock. So anytime you can trade. And the most important part is, if I am in India, it is night right now. If you are in US, it is day right now. And if you want to trade USD INR, you can still get the rates and you can trade. Okay, so and if you, even if now you want to trade USD INR, you can also trade. Now the only problem is NSE as an exchange, they have limited time preview because of RBI guidelines, but they are also thinking to extend the trading time from morning 9 o'clock to night 9 o'clock. But at least MCX, which is the commodity market, it is open from morning 9 to night 11 o'clock, 12 o'clock. So the global markets of commodity and currency, they are open 24 hours around the clock. And that is why it is not only easy to trade, there is no barrier to entry, risk management purpose, all the companies, big companies which are there, they also use currency to manage their risk. And you can trade anytime. The last is low transaction cost. Compared to trading equity, compared to trading commodity, the forex trading is lowest in terms of cost. So in terms of cost, they are the lowest. So these are like few advantages of forex trading versus commodity or equity or any other market segment trading which is there. These are the main features or pillars of forex trading. Now, what does the forex rates that we see, they get influenced by? For example, you see USD INR and the price of USD INR keeps fluctuating up or down. Sometimes it is up, sometimes it is down. Now, what is the key role? Who is it? Only demand and supply? Many people require dollar, that is why the dollar is appreciating, or many people require INR, that is why INR is appreciating. So is it just demand supply or is it something else? So these are the main factors of forex rate. So this is not being governed by one factors. You can have a lot of features to basically have an impact on the currency movement. So national economic reforms. So if you see now, India is in the purview of Mr. Narendra Modi as our Prime Minister. We have got a lot of reforms. There are reforms for FDI investment. So recently, Geo by Reliance, they have raised money from outside people who are ready to invest in Geo as a venture. So if you have some economic reforms which are there, and by FDI rules, our country allows any outsider to have a control of 9.99% into Indian companies. And based on that, for example, if Facebook, who is one of the biggest investor in outside investor in Reliance Geo, they are holding 9.99%. So one of the biggest factor of change of forex is the economic policies and the reforms. So national economic performance is also important. Along with that, reforms are also very, very important. Now, what do you mean by economic performance? Economic performance of a country can be taken by all the macros which are there. So the GDP of India, is it going up or down? The inflation of India, all those parameters can come under economic performance. What is the fiscal deficit on that front? So all the economic performance, if the country is improving on economic performance, then the country whose economic performance is higher, they will command premium. Central bank policy, whether they want to reduce the interest rates, increase the interest rates. So all those monetary effects from central bank policies, they also affect the rates on the exchange. Then you have the interest rate itself, the trade balance. As I have already said, the imports and the export, more number of people are importing or more number of people are exporting. All of that net balance, do you have excess reserves or you are deficit of dollars? That is there. Fourth point is political factors. Sudden change in political factors, like if the new government is getting elected, the old government is going out, all those political factors can also have an impact on dollar. For example, now it's because of COVID. Otherwise, by November, we will be having elections in US. So that is one of the point called as political factors. Now, political factors, now we don't know whether Trump will get re-elected or Mr. Biden will come in. So who will be the next candidate? Will it be a challenging task for Trump to come back or not? So all those kind of sentiments of political factors can also have change of have an impact on the forex rates. Then about the market sentiments. Now, because of COVID, we are very clear that the exports which were happening from China to various other countries will get hampered because now the demand, because of the lockdown, the demand of many items might not be same as it was there in last 8 months, 1 year or so on. So market sentiments, suddenly when certain things happen, then there are certain expectations which are there, and based on that also currencies can change. Then there are unforeseen events or unknown events, some natural disasters or terrorism. So any kind of events which are there, they does not only impact the equity markets, they also impact the foreign exchange. So the forex rates is not only governed by one or two factors. There are multiple factors. I've just listed down a few, the main factors which are there, but there are multiple factors by which the forex rates can change. So it's a complete dynamic world. Anything changes anywhere, and suddenly the forex rates can differ, or sudden change of forex rates will happen. I'll show you how USD INR, the history of USD INR has have an impact because of all these factors. Yes. Any question?
Sir, continue, sir.
Yes. Now, before we go into the domestic currency market, this is another important thing to understand or know: G7 currency. Now, what is this G7 countries or G7 currency pairs? This is, as I said in the first slide, it's the exchange. Let's go back quickly. If we try to see the third point over here, there is no centralized location. So there is no one place at which there is a market where all these currency gets traded. Okay, it is just an electronic network of banks or brokers or institutions or countries. So coming back to this point, we can now have something called as G7. Now what is this G7? G7 are the 7 countries. Okay, it's the governmental organization that meets and addresses to economic and monetary issues, that's separate. But the agenda here is G7 are the 7 countries where the largest of their currencies are traded. And out of all, so US, UK, Germany, France, Italy, Canada, and Japan, out of all, US commands over all of them in the sense of number of transactions which are done in US dollar is highest. So all these currency pairs are very, very important. So these 7 currency pairs are very, very important. Now I had shown you currency pairs on NSE. One was USD INR, other was GBP INR, that is from London. Then we also had the Yen INR, which is from Japan. So the Germany and Italy, they basically fall under the Euro INR. So ideally, if you try to see, we have on NSE, that is our domestic market, on that also you can trade these G7 currency. Now on NSE, we do not have listing of Canadian dollar, but US, UK, Europe, and Japan. We already have 4 currency pairs which are listed on our exchange. So anyone can trade on those currency pairs, and they also have access to these 4 main currency pairs out of 7. So as the word said, it's not a centralized location. It is just a kind of electronic networks which are linking different countries together. And out of all the countries which are there, these 7 countries, they play important role in Forex market. So G7 is very, very important. As I said, major currencies. So if you see major currencies over here, all these are kind of the main currencies which are there in the world. So euro, dollar, if you see every currency over here is in terms of dollar. So euro, dollar, euro, and in terms of USD, USD, JPY, GBP, USD, USD, Swiss franc, CHF, Australian dollar, AUD versus USD, Canadian dollar versus USD, New Zealand dollar versus USD. If you try to see over here, all the countries have their reference to USD, right? So if I consider my country, that is India, we'll also have a currency pair called as USD INR. So the main agenda of this is to understand each of these currency pairs, they are kind of pegged or kind of having a reference with respect to USD. By seeing this, I can say that one of the most important Forex element that we need to track is USD. So there is an index where all these currencies are tracked simultaneously. So I don't need to check each of these currencies separately. There is something called as dollar index, like Nifty or Sensex. These two are equity market indices. So Nifty is having like 50 stocks as a composition of index. Sensex has 30 stocks as a composition of index. There is an index called as dollar index. When you say index, that means it is composition of. So dollar index is also composition of all these currencies of different countries. So one is Europe, then Japanese, then British pound coming from UK, then you have Switzerland, CHF, Australia, New Zealand, and Canadian. So if you try to see, actually these are 6 countries, and 7th country is US itself. So again, G7. So why G7 is important? Because these 7 countries together are linked and they make up the Forex market. So if I have to understand what is Forex market, simple way, Forex market is G7. All these currencies which are keeping a reference with USD. So most important is USD. Okay. Now the big players, as I said, US dollar by far is the most traded currency and makes up almost 85% of all the transactions in the world. Recently, if you see, the US dollar has gone a bit down in terms of number of transactions, but more or less 85%. So if you take the average of last 20 years, 85% of all the trades have happened in terms of USD. Second is euro. So almost like 39% of all the currency trades. Now this is not only with respect to USD, euro with respect to INR, euro with respect to any other country. 39% of all the currency trades with reference to euro takes place. And third is Japanese yen. So if I try to understand, as I said, the main role, the leading role in terms of Forex is also commanded by the dollar. So US dollar is very, very important for us. If I want to also understand my Forex market, I should understand what is the dollar. The dollar will have a bigger role because majority of transactions are done in terms of dollar. So if I want to purchase oil from Abu Dhabi or from Dubai or from anywhere else, I have to pay dollars. If I have to take gold from Russia, I have to pay dollars. So agenda here is 90%, 80% of the transactions are happening in dollars. So the main part is I should know how does this dollar move, and the dollar is being commanded with respect to all these 7 countries, and that is why there will be an index called as dollar index which we need to take care. So we will also, I'll show you, and we will also track the dollar index. Why are we tracking dollar index? So that we come to know how the dollar is performing with respect to big countries. If dollar is weakening compared to other countries, then we will know that dollar is losing strength. If dollar is strengthening, then we will say that dollar is gaining momentum or strength compared to all the other countries. So tracking dollar is very, very important. Now, type of Forex rates, there are different Forex rates which are available. The most traded ones are futures and spot. So spot market, and then there are forward markets, future markets, option markets, and swap markets. Now, except for the first one, the spot markets which are there, all the other markets are nothing but derivatives market. So always you will have 2 parts. One is called as spot or cash market, and the second part is always called as derivatives market. So forward, futures, options, swaps, all this, they are nothing but derivative market. They come under derivative market. Spot markets, like for example, if you want to go, you talk to a bank, you want to convert your INR into dollar or any other currency, then they will give you spot rates. So if I go into the bank, so tomorrow try out, go to a bank and just tell them we want to buy dollars. Take INR and give me dollars. They will give you spot rates. So different rates are available: spot, forward, future, option, and swap. Normal retail individuals, they normally use spot rates. Now, who will use this forward, futures, options, swap market rates? So who will make use of the other rates? For us, the spot rates, we have understood the retail individuals will use more or less the spot rates. What about the other forward, future, and derivative quotes which are there? Who will use? So the big corporates, big companies who are also involved in Forex, they will use the derivative contracts to hedge themselves. But for retail individual like me and like us, we need to know spot markets. Spot market means the live market rate, what is going on right now. That's where the spot market comes into picture. Now, there have been certain important advancement from India side as well. The 2 important regulation point of view, which is very, very important from India point of view, is the Act of Foreign Exchange Regulation, that is FERA Act in 1973. So that was the oldest act and then it was replaced by the FEMA Act. So FEMA is nothing but again Foreign Exchange Management Act in 1991. So these were the two acts, the same act. There certain modifications were there, but first it was called as FERA, and now it's been named as 1999 after the Asian crisis of 97-98. The FEMA came into action. The second part, which is money and security markets. So all the money and security markets, equity markets or set up is been set up by Reserve Bank in 1999, and then it was expanded in 2004 to include foreign exchange markets. So if you see on NSE, when we are trying to see the rates, foreign exchange rates, they came into existence only after 2004, because prior to that RBI did not allow, apart from the equity trading happening on the counters of the exchange or commodity trading happening on MCX, they did not involve currency. After 2004, the RBI had given permission to all the exchange in India. So for an example, NSE or MCX, they can also start trading exchange rates. So person can trade exchange rates on the exchange counter itself, like how you are trading stocks. So people can even trade Forex. So that came into existence after 2004, but these were the three main acts, where in 1973, the FERA Act was being changed to FEMA Act in 1999, and the RBI in 2004 allowed the foreign exchange markets. So the same markets which were meant for securities, they were also allowed for foreign markets. Now, currency derivative, as I said, the spot market and the currency market. So currency derivative market, spot markets are normally being used by retailers, but the derivative market is used by the corporates. And this is a much bigger market, because many corporates make use of this segment to hedge, or maybe even to use it as a form of exchange. So currency future market. So same like what we have derivative contracts on equity, you will also have derivative contracts on currency. So these currency futures market, I'll show you on NSE, which has different expiries. So once we go to NSE exchange, I'll be showing you the Forex market. And in the Forex market, NSE has currency futures market. Now, future market means there is a settlement date, because these are derivative contracts, they expire, and normally the expiries are March, June, September, December. And let's understand why the expiry is in March, June, September, December. March, June, September, December also forms the quarters. So every quarterly settlements, because there are many corporates who have the quarterly transactions, means if all the reports which come out of earnings and the hedging that company has to do, they normally prefer quarter on quarter basis. So March, June, September, December are heavily traded contracts, or you can say in more demand contracts, because many corporates want to hedge themselves on quarterly basis. Now you can also hedge yourself on yearly basis or semi-annual basis, but majorly the quarter cycles work the best in currency. And some of the contracts are also traded not on the exchange floor. They are called as OTC contracts, and I'll be showing you the CME. So CME is called as Chicago Mercantile Exchange. This is the biggest exchange on which the Forex is traded. Across the globe, many people have access to this market. It's located in US, Chicago, but all the people from Europe, from Japan, from Singapore, from Hong Kong also trade on CME. Okay, and the most important thing, they have this exchange working 24 hours round the clock. So NSE, if you see, it's not working 24 hours round the clock, but this exchange, they work 24 hours round the clock. The US Chicago Mercantile Exchange, and their global platform on which everybody trades is called Globex. So over here, the Globex is basically their automated trading system, which also does the clearing and everything. And it's been available for global players. So it is running 24 hours round the clock, and it is accessible to all. So that's very, very important. So in India, we have it on NSE, and outside it is on CME, Chicago Mercantile Exchange, located in US. They have a Globex platform, and this Globex platform is meant for global participants who can come and trade. Currency options market, same what we have in on NSE, also the same contracts. We also have it in futures, we also have it in options. Now futures and options, they are nothing but part of derivative contracts, and there are many people who trade in options as well. Now the main important point about the option exchange, so there are options, currency options, which are there, call and put. So currency options, they are classified as call and put, and there is one more big exchange where people trade the options, are called as CBOT, or Chicago Board of Options Exchange. So this is one of the biggest exchange in currency where options on currencies are traded. So if we go back, this exchange, Chicago Mercantile Exchange, CME, is where futures are traded. Predominantly futures or forwards are traded, and this exchange, CBOT, so the CBOT exchange or CBOE exchange, is where the options are traded. Again, it is located in US, and they have highest liquidity, highest number of participants. Now participants in the derivative market, as they are there in equity markets, there are the same participants are there in the derivative market also. They have three kind of participants, either the hedgers or the speculators or the arbitragers. There are three kind of participants in any derivative market, not only in currency, even in equity derivative market, even in commodity derivative market, even in the currency derivative market. There are hedgers, speculators, and arbitragers. Now, who are hedgers? Hedgers are predominantly the corporates who basically would like to hedge their exposures in different currency. Speculators are the guys who want to trade currency up and down movement which is happening. They are kind of traders. And arbitragers would like to do buy and sell of currency wherever they find an arbitrage difference between one currency and the other. So majorly there are three kind of participants for currency derivatives. Now this we have already covered about demand and supply. This has been the growth of exchange traded currency and futures and options on our NSE platform. So NSE market, at least in India, for USD INR, they have the highest contracts which are traded, and the data over here which has been given by NSE themselves is from 2008 to 2015. Now why I've chosen only till 2015, because after that the exchange volume has been highest. So prior to the start, so the agenda here is to show you kind of from the start how it is been in a pickup. So from 2008 onwards, the pickup has been gradual, but finally in 2010 and 11 it has peaked. So the highest volume can be clearly seen in 2011, 12, 13 kind of range, where the turnover of NSE is huge. Now the turnover of NSE is marking almost 1/3 of CME markets, right? So that's how huge the NSE turnover has become in so many years. So more or less now 15 years into the listing of all these contracts, as RBI allowed after 2004. So that's also commendable when our own exchange has so much amount of turnover. That clearly shows that much amount of liquidity is there, participations are there in our domestic market also for the currency market. So the currency market, which obviously the Indian people are interested in, will be USD INR, because we have the domestic currency as INR and the backbone currency is USD. So the bottom line, let's understand what we have understood till now. The reason why Forex is largest market in the world, as I said, it empowers everyone from central bank to retail investor or retail individual to see profits from currency fluctuation related to global economy. So the participants can be retail individuals to corporates and then to central banks and to the country themselves. So idea over here is everybody is part of Forex some way or the other. So moment you step out of the country, you have to be part of Forex. And there are various strategies that can be used to trade and hedge currencies. So in order to trade and hedge currencies, that is why there is another segment called as derivatives segment. So the currencies also have derivative segment. As I said, spot rates and derivative rates. So derivative segment is widely used by traders, by speculators, by hedgers for their own purposes. So that's very, very important. So this gives you a kind of overview about the Forex market, how things are global and also from domestic point of view. Till now, the 2 points which are very, very important, the global market is CME and the local market is NSE, and they both have huge amount of turnover. So now let me walk you through those two markets, exactly what are the listings, kind of contracts there on the NSE and then on the CME. So here I am on NSE exchange. If you see, these are the 4 currency pairs. Out of G7, we have covered 4. So on NSE, you can find the 4 currency pairs which are there, and they predominantly, as we already know, the major transactions happen in USD INR term. Okay, so 90%, 80% of the currency transactions, even in India, 93% is USD INR. Then comes Euro, and to some extent is GBP or JPY. Now, if you go out up over here, you have equity derivatives, you have currency derivatives, and you have commodity derivatives. As I said, there are 3 segments: equity, currency, commodity, and each of these have derivatives. Now, derivatives are your forward, future, option, swaps, as we were discussing. And out of 3, we have always the spot market and the derivative market. So currency derivatives are there on NSE. So if anybody who wants to hedge their currency exposure, they can use their futures and options contracts under derivatives to do so. So ideally now, these are the 4 main pairs. Let us go and see them in detail. So if I try to go inside, I can have a complete derivative watch. Now let's understand what is this. You have the 4 currency pairs. Okay, so USD INR, Euro INR, GPB INR, and JPY INR. Now each of these currency pairs, if you see, let's say for USD INR. So USD INR, the symbol, along with that, there is a date involved. So 28th of September 2020, 27th of October 2020, 25th of November and 2020, and you can have more contracts like this. Now, these contracts, if you see, are monthly contracts. So all of this, if we see, are basically monthly contracts. So ideally, when I see this, each of them are called derivative contracts, because as I said, derivative contract will have an expiry date, and these are the expiry date. So for example, September month, which is the expiry date, 20th of September. In October, this contract will get expired, and so on. So these are all the codes that you are getting is for the derivative contract. So futures contract of USD INR, same way you have it for Euro INR, and you can clearly see September, October, November, December, and so on. So ideally, when you have the GBP INR, and same way you have JPY INR. Now what I want to show you over here is, if you actually see the USD INR, you have September, October, November, December, all the contracts going up to next year, they are traded. Okay, so they all are traded. We can clearly see the LTP price, the volumes in the contract, the turnover in the contract, number of trades are happening. But if you go to Euro INR, the contracts are not traded. The nearest 2 or 3 or 4 are traded, rest their contracts are not traded. Same way if we go for GBP INR, after 2-3 they are not traded. After 2 months of expiry, JPY INR is not traded. This shows that the most liquid contract in India is also USD INR. INR being our domestic currency and USD being the backbone of all the transactions in the global world. That's why USD INR is the highest traded, or we can say the one with the highest turnover. Right, so that's very, very important to understand. Or even on Indian exchange, this is the highest. Okay, so I hope you understood seeing the quotes. These are the quotes. For example, bid and ask. You can see 73.98 was the last bid and ask was 73.9825. So if you see over here, 9800 9825. So the change, the currency changes not in terms of 2-digit, it changes in terms of 4-digit. So that is why it is called as 1 BPS. Why the 4-digit? The currencies normally change in terms of 4-digit. If you see 9825, the next will be 50, 75, and 100. So the difference, it is 4-digit, not 2-digit. If you see the stocks, if you're trying to buy any stock, they are only up to 2-digit, but currency has 4-digit and 25 basis point, or we can see the spread over here is always 25 basis point. Basis point means up to 2 decimal is called as percentage. So whenever we say percentage means divide by 100, 2 decimal. Whenever we say basis point, that means 4 decimals. And if you remember, next time when you see the monetary policy of RBI, they will tell you they have changed the interest rate either up or down by 25 basis point, by 50 basis point. When they say basis point, BPS, that means whatever is the number, divide by 10,000. So if I say I have changed the interest rate by 25 basis points. When I say 25 basis point, not percentage, 25 basis points, that means I have to divide 25, I have to divide it by 10,000. So what is this? Basis point. 0.1234. 4 decimal points, they become your basis point. So I can say that the minimum change which is happening in currency is also in terms of basis point, not in terms of percentage. So they also call it as pips or basis point, right? So interest rates normally we call basis point. In currency, we normally call it as pips. But agenda here is divide by 10,000. Percentage means divide by 100. BPS means basis point, means pips means divide by 10,000. So the change in currency is always 4 decimals. That is very important to remember. Now we have 4 derivative contracts which are there: USD INR, Euro INR, GBP INR, JPY INR. Everything is with reference to INR. Everything over here is with reference to INR. Let us understand what is cross currency. If I see cross currency is Euro USD. Now what do you mean by Euro USD? if you see the price which we have is for USD INR and Euro INR. Okay, so I have USD INR and I have Euro INR, but this currency, if you see, is Euro USD. So the rate of Euro USD is 1.1798, or let's say 1.18 is the rate of Euro USD. Now let's see how this currency, cross currency, is found. If you see over here, you have Euro INR rate and you have USD INR rate. What I will do, I will divide Euro INR by USD INR. So if you see USD INR and Euro INR, both of them have common something called as INR INR. Now I will remove both the INRs and I will get a new currency called as Euro USD. So let me divide them and see. For example, this is 87.3175. So I'll put 87.3175. That is the Euro INR. Divide by USD INR. So I am dividing it by 73.9800. So 73.9800. So what have I done? I have divided Euro INR by USD INR. What do I get? I get 1.1802. So if I divide Euro INR by USD INR, INR will get cancelled out. You only get a new currency called as Euro INR, Euro USD, and that is listed over here, 1.18. So what we have over here is 1.18. This is the currency called as Euro USD. So I hope you understood how I got this particular rate. The rate of Euro USD is nothing but Euro INR divided by USD INR. Now in the same way, can I get GBP USD? Yes, it's very simple. Divide the GBP by USD, you will get GBP USD. So GBP INR and the USD INR. So if I try to take, if I now want to find the GBP USD currency pair, I will take GBP INR and I will take the USD INR, because we need GBP and we need USD, right? So GBP and we need USD. So what we'll do over here, GBP and the USD INR. So again, the same thing. GBP is 96.54. So let me clear this out. 96.54 divided by the GBP divided by USD 73.98. I get a new currency called as GBP USD. So INR is no longer there. We have a new currency now called as 1.30, which is GBP USD. GBP USD, the rate is 1.30. So we can see now we have a new currency pair called as GBP USD. Now, why are they called cross currency? Because when you are in your domestic country, in India, you will have more focus on INR. So if you want to go to, let's say, for example, US, you will convert your INR to USD. If you want to focus to Europe, you want to go for Europe tourism, you will convert yourself into Euro. If you want to go to UK or London, you will convert over here. Now, these are the main four available contracts which you can trade, because majority of our communication of trades happen in these countries. Now the question is, when you have INR but you don't want INR, you can mix and match. You can remove INR and you can create something called as cross currency. So cross currency, Euro USD, GBP USD, JPY USD. If you remember, I told you G7. All the currencies were traded with respect to USD. So let me quickly take you there. We had that G7 where all the currency pairs were listed. This one. So you have the Euro USD, you have the JPY USD, you have the GBP USD. These are the main currency pairs, and that's the same currency pair you can also create, which are called as cross currency. Okay, so now I have access to Euro USD on the NSE exchange also, because I created this Euro USD from where the two INR contracts merged together can give you a cross currency. So this is the global currency, because in this you do not have any INR. In this GBP USD do not have any INR. USD JPY you do not have any INR, right? So there is no INR over here. So this is your prime INR versus the global currency. The cross currency is always called as removing the domestic currency and you get a new currency is called as cross currency, right? So we have removed the INR from them and we have merged them together to give a new currency called as global currency, the G7 currency pairs. So this is very, very important. Couple of information about the currencies which are listed on NSE, the contract specification, and if you want you can also dive down and understand a little bit more from the brochures and informations. You also have different currency option strategies. So if anybody is interested to dwell more into the options market or want to trade into options strategies, NSE has given this entire strategy booklet on NSE currency options, and these are all different strategies in options. So bullish strategy, if you are bullish on currency pair, how should you trade? By going long on call, or if you are bearish, how can you trade? So all the strategy pairs are being given over here. You can also have a look at them, and they have given it with a contract and example so that it also helps you to understand the PNL side of it, right? So there are roughly, I think, around 12 or 14. I try to see this. So we have around 24. Yeah, so you have 12 into 2, that's 24 strategies are there in options, right? So somebody who's interested, you can also look into this. Brochure will only give you all the details of all these currency pairs that I've spoken about. So that will help you to basically gain a little bit of more importance. Okay, now let's go back. Here we need contract specification. Now this is very, very important thing, and to also understand when we are trying to trade any of the currency pair, this is with respect to INR, Euro INR, USD INR, GBP or JPY INR, you need to understand what are the contract specification. Now if I try to trade one lot of USD INR, they have clearly mentioned you have to trade minimum 1000 USD. That means if you want to trade in NSE exchange for USD INR contract, you need to have minimum 73,000 rupees. Okay, because $1, which we have already seen, $1 exchange rate is 73. So for example, if exchange rate is 73, $1 to USD, the contract size is of $1,000. That means into 1000 USD, because 73 is $1, but they are saying that one contract basically holds 1000 USD. That means if I buy one contract, I am actually buying $1,000. If I'm selling one contract, that means I am selling $1,000. So in short, you cannot trade on exchange for $1 to buy or $1 to sell. Minimum you have to do a transaction of 73,000 rupees, or you can say $1,000, right? So minimum contract size, this is called as contract size. So contract size is of 1000 USD if you're trading USD INR. If you're trading Euro INR, it is about 1000 euros you have to trade together. So if somebody has 200 euros in their pocket, they cannot trade. Minimum contract size is 1000 euros. So minimum, if you're trying to trade, you need to trade 1000 euros, 1000 USD, 1000 pounds, or 100,000, that is 1 lakh yen. So a lot of yen are required if you want to trade JPY INR. So these are the contract specification, minimum contract size that you have to trade. Then, as I had already told you prior, the amount, the change or the fluctuation in the currency price is around 0.0025, 4 decimal place, divide by 10,000. And each ticker which is there is of 25 basis point. Now, the timing of the market 9 a.m. to 5 p.m. So in India, you do not have a 24 hours market like how we have on CME or global Globex platform, but in this it is limited to 9 to 5. And the contract trading cycle, we have already seen 12 months trading cycle. Every month there is a expiry of all the contracts that we saw for each of these currency pairs. Okay, so this is very, very important to understand, and there are various other features of extreme margins of what will be required if you want to get into the derivative side. The most important part, the last part over here, is the final settlement price. So there is always an RBI reference rate which comes at 12:30. So 12:15 to 12:30, RBI gives a reference rate for all these exchanges. Okay, so for RBI will give you a reference rate for USD INR, reference rate for Euro INR, for GBP INR and JPY INR. So ideally, there is a reference rate which comes for each of these currency pairs at 12:30, 12:15 to 12:30. So that is also one of the important pointer which you need to know when you are looking into the Forex market. Now quickly, let me also give you a little glimpse of the global market. So as I said, Chicago Mercantile Exchange, which is the leading and the most diverse derivative marketplace. Now, what do you mean by diverse? Diverse means all the kind of contracts are listed on this exchange. For example, if we go into, let's say, markets. So we have markets based on products. So here you can clearly see the exchange where the different contracts are traded. Now, apart from that, let's see this over here. Agriculture contracts are traded on this exchange. Energy contracts are traded. Equity indexes are traded. Forex is traded. Interest rate is traded. Metal is traded. And various options on these are traded. And that is why it is called as one of the world's biggest exchange, because you have all the things listed on the exchange to trade. Like NSE has 3 parts: commodity, they have just recently started, Forex and equity, but they have all these and they are traded across the globe. Right? So that's why they are by far one of the biggest marketplace, and the exchange also provides a platform called as Globex to basically get their quotes, or anyone who is participant across the globe can go out and trade. So all the different derivatives contracts are there, even from emerging markets like Mexican, Brazilian, Russian ruble, South African rand. All these can be traded. This is very, very important. Not only the advanced countries, Euro, Japanese, British pound, Australian dollars are traded, but more than that, even the emerging markets, those currency pairs are also listed on the exchange. So this is very, very important, where you need to understand that under Forex, they are covering not only the emerging markets, but also the G10. These are the main liquid contracts, and the emerging market, they also have USD INR. So emerging market, on that they also have USD INR, apart from the other contracts which are there of Mexican, Brazilian and stuff like that. So this site, they have the different, here we can see the Indian rupee USD futures, not that much liquid, but though they have the price rates for the USD INR as well. So ideally, when you see this, it's very, very important that the global market, which is having a good command, is CME, which has lot of market of different formats. They also have different services, as I said about Globex, and the same way how the Indian markets perform, they also have all their services. But the ideal case over here is they are one of the uh, largest, you can say, from global forex point of view. So that's very important to understand. So this was the highlight about the Indian markets and the global market. I quickly want to show you the dollar index. So dollar index is very important to know. So let me quickly show you the chart. As you remember, there were 7 currency pairs which we were talking about, and under the G7 there is a dollar index which is nothing but a combination of all the currency pairs. So this is your dollar index. Let me take a here. So if I see the dollar index, so this is US dollar currency index, and the agenda over here is to basically understand the dollar versus the other currencies. Okay, so this is dollar versus the other currencies which are there, and this is very important to know that all the 7 currencies which are there with respect to dollar, they are combined together to give you a dollar index, like how we have Nifty index, like in this case, and the bank Nifty, which is the index of banks. So the same way you have a dollar index. Now let us understand how can this dollar index help us to understand USD INR. For example, if we see from 2019 to 2020, this is 2019 to 2020, the dollar index has gone up, right? To some extent, it has gone up. And after 2020, like the start of this 2020, it has gone down, right? So we clearly know that in this last 7-8 months, the dollar index has gone down. So there has been an uptrend in dollar, and then there has been a downtrend in dollar. That means the dollar was gaining strength in 19 to 20 or March of 2020, and suddenly after COVID, we can clearly see a downtrend in dollar. So let us see how this gets reflected in USD INR. So in USD INR, if I try to see from 19 to 2019 to 2020, we basically can see that as the dollar has gone up, so USD INR, the USD has also gone up. Now, what do you mean by this? If you see, I wanted to go to travel US. If I want to travel US, then I need to convert my INR into dollar. So if here it was, the rate was 70, that means I had to pay for every dollar that I want to buy, I have to pay 70 rupees. So I paid 70 rupees and I got $1. And then if you see over here, if you wanted to go to US, you had to pay 76 rupees to get $1. So to have the dollar in your pocket, you were giving 70 rupees. Now you are giving 76 rupees, right? So that shows the dollar has gained strength. Same way, when we try to see from 2020 March to 2000, the current juncture, the dollar rate has come down. So this way you can understand that DMI, which is the dollar index versus the
Naturally, sir.
Yeah. What is happened? Venkat. Venkat.
సార్ వినిపిస్తున్నా సార్.
ఏమైంది? సార్
సారు అవును సార్.
సార్ వెళ్ళిపోయినా సార్?
సార్ ల్యాప్టాప్ లో పవర్ అయిపోయినట్టుంది సార్.
ఓకే ఓకే, బ్యాకప్ అయిపోయిందా?
అయిపోయినట్టుంది.
ఓకే.
ఒకసారి సార్ కాల్ చేసినా సార్.
వస్తుంది సార్, వస్తుంది.
నైస్ మీటింగ్
సార్.
వెరీ గుడ్. బ్రహ్మాండంగా రాత్రి 8 గంటల కూడా అవుతుంది.
ఎక్స్ట్రాడినరీ సార్.
యా వండర్ఫుల్ వెంకటేష్, వెరీ గుడ్
సార్. థ్యాంక్ యూ సార్.
సో యు ఆర్ అపాయింటెడ్ యాజ్ ఎ టెక్నీషియన్ ఫర్ వెబినార్.
థ్యాంక్ యూ సార్.
కంగ్రాచులేషన్స్ ఫర్ స్పీకర్ ఆల్సో. ఓకే మా.
Hello.
Naturally, sir.
Yeah. No, he logged out, no? Hello.
Sir, చెప్పండి sir.
Yeah, he is not going to come. His presentation is over.
Okay, sir.
Yeah. Okay, sir. You want to speak something, Professor Chenab sir?
Chenab sir, I will also leave, sir.
Chenab sir.
Sir, leave in, sir.
Okay. Now I thank Ronak Mundra. He is an excellent speaker and trainer. I thank all the participants. Venkat?
Sir.
What about the feedback form?
ఇప్పుడు పెడుతున్నాను సార్.
Pettu.
Okay, sir.
Yeah.
Within
Yeah,
1
I
second.
request all the participants to fill the feedback form. That feedback form is equivalent to your attendance. All the participants, I request to fill the feedback form.
Those who are in YouTube, please fill the. Sir, చెప్పండి సార్.
లింక్ పెట్టు.
వెళ్ళిపోయింది సార్.
పెట్టేసినా?
మీకు చెప్పాలి సార్.
What about YouTube?
YouTube also, sir.
Okay. వాళ్ళు అన్మ్యూట్ చేయి, ఏమైనా మాట్లాడతారేమో.
Just unmute yourself. Those who want to talk.
Anybody?
ఒక్క సెకండ్ సార్. అందరినీ అన్మ్యూట్ చేసి మళ్ళీ అన్మ్యూట్ చేసి. Just unmute yourself. Those who want to talk.
Hello.
Hello, sir.
Hello.
Yes,
okay.
Sir.
Good evening to all of you, sir. It is very good, informative, and especially useful to MBA students, sir. And yesterday also, I listened to some speeches and some experts delivered on financial literacy. It is very good of you to initiate this type of programs. I'm very proud of you, sir. And I think it is of 7 days, sir.
Yes, sir.
Okay, sir. And I'm very proud of you, sir. Once again, I thank all the resource persons, sir, to express various topics. Really, it is very useful, sir, especially students of MBA, sir, and even other degree and PG students also. And I think it is especially for PG students.
Yes, sir.
And I'm very proud of you, sir, once again. And keep it up and initiate this type of programs at least once in a semester, sir. Is it possible, sir? And
Sir, Rajeshwari sir, unmute yourself, sir. Rajeshwari sir, just a second.
That
Okay,
will look
sir.
into, sir. Yeah, Mundra, sir.
That's all, sir. That's all, sir. Let others speak, sir.
Okay, okay.
If anybody is ready.
Sir, Mundra, sir.
Yes.
Yeah, you want to speak anything to our students?
No, so first of all, thank you to Osmania University and Naresh sir for conducting this entire program. That's really good because all the students who are trying to learn and understand, they are getting a lot of knowledge, at least from the experts who are trying to deliver. So I hope it brings them to a good advantage, a platform where they can learn a variety of subjects from the people who are there in the industry. So first of all, thank you to university and yourself to put all these efforts. And for students, I would suggest one has to explore more, and as they get into the practical world, things will be quite different. So whatever we learn in books, they are okay, but you need to also on the sideline start exploring whichever subjects you have. Try to explore from practical side as well. The practical exposure will give you a lot of industrial insights, and these kind of seminars, workshop you should attend, and also participate in asking various questions. So thank you very much for being there and listening to me, and thank you sir and university for also giving me a chance to deliver the same.
Yeah, thank you, sir. On behalf of the Department of Commerce and the Financial Literacy Center, even Osmania University. So you have given excellent input, sir. Most of our students are appreciating your effort. So thank you, sir, for accepting, and you are here with us in this evening. I am very much grateful to you, sir. Thank you, Ananda.
Sir,
Yeah.
some of the people asking about WhatsApp group link, sir.
Okay, okay. Group link.
WhatsApp. డైరెక్ట్ చాట్ బాక్స్ లో పోస్ట్ చేయండి సార్.
దీంట్లో పెట్టలేదా నువ్వు?
నేను పెట్టినా సార్, ఏది ఫీడ్బ్యాక్ పెట్టినా.
Okay.
గ్రూప్ లో నేను
I request all the participants to click that link and give your feedback. That feedback is equivalent to your attendance. So every day we will do like this. That's why according to your attendance only we will issue the certificate. This is only for the purpose of you only. You have to try to learn something from the experts. Most of the speakers are excellent speakers, and they are having a lot of experience in their own field. So here we are bringing to you for the purpose of getting benefit out of the speakers. It is not that much easy to get the speakers like Mundra sir. They are very much busy in their day-to-day activities. But even though he is with us even this today's evening session, and even in Next coming days also we will go with other eminent speakers. Don't worry, on the part of the speakers and topics we are taking care of. Not only that, your presence is required. So please make use of this facility. Now I am requesting all the students to use this particular platform and learn something. At least from every topic you must learn some 10 to 20 or 30 new words or the topics. That will help you a lot in your day-to-day life. Sir Mundra sir, thank you. Now you can exit, sir.
Yeah, so thank you very much.
Thank you, sir. Thank you very much, sir.
Thank you, sir. Thank you.
Thank you.
Wonderful session, sir.
Yeah, anybody? Venkat?
Sir, shall we close?
ఈరోజు ఇంకేం వాళ్ళు పంపుతారుగా నీకు
ఆల్మోస్ట్ ఆల్ కంప్లీషన్ సార్.
వచ్చినాయా చూడు ఒకసారి.
సెకండ్స్
రెస్పాన్సెస్ వచ్చినాయా? ఏమైనా ప్రాబ్లం ఉందా చూడు.
ఏం లేదు సార్, అన్నీ అయితే ఉన్నాయి.
అవుతున్నాయా? ఓకే.
Please send WhatsApp group link, sir.
Yeah, anybody want to speak?
Sir, please send WhatsApp group link.
WhatsApp link. No, it is very difficult to maintain all these 771 numbers. So what I am doing from even yesterday also, please go through your email. So we have your email IDs. So whatever we want to forward to you, we are forwarding with your email IDs. So please go through or open your emails and you will get all the links.
Okay, sir. Thank you.
It is very difficult to maintain WhatsApp group because many students are registered. But what I observed today is most of the students they are not attending. But some of the students they are with YouTube also. But anyhow, this is very important. So your attendance counts from today onwards. Forget about yesterday. Today onwards, I will count. So out of 7 days, I will count 6 days. Those who attend all the sessions in these 6 days, they will get the certificate. This is my side.
Okay, actually, you today you provide WhatsApp links.
That's why I am discounting yesterday.
Yes, sir. Actually, you provide in Zoom link in WhatsApp group.
You are not having email ID. You are provided or not?
I am provided, sir. But
open it. You open your mail, no? You will get that link.
But today you didn't.
Sir, actually today you send the session link in the WhatsApp only.
No. Even you can see your mail ID also. Every time what I am doing,
No,
whatever
sir, today...
I am sending to WhatsApp group as well as email. Please check your email. If you are not getting email means your email address may be wrong.
Sir, feedback form is not sent, sir.
It is not opening. Is it opening or not?
No. Feedback is it is not opening. It is not seen in our WhatsApp group.
No, not in WhatsApp
Feedback is
group.
not sent,
You have
sir.
to go to your mail ID.
See the chart for feedback link.
Okay, sir.
See the chart.
Okay, sir.
Even it may be a YouTube or maybe Zoom also. Here we are providing this link. Make use of the link. Please click it and respond to our certain questions. Now that itself becomes your attendance.
Yes, sir. Thank you, sir.
So otherwise, if I am not going to do like this, so most of the students, what they will do, they take the certificate, but they don't take away knowledge. So my interest is very simple. You please take away certain knowledge out of this particular program. Otherwise, our effort goes waste. What is there in certificate? Knowledge is important first. Anybody, any doubt? Venkat? Venkat. Venkat. Yeah, I request Professor Kannapa sir. No, no.